Yeah, yeah, we already talked about that. Wow, CMBM. It's cool, man. I don't remember a lot of the ticker names, but that's pretty wild. WTO. Wait, was WTO the one that we went in like a long time ago? Probably didn't stay in it very long. I remember getting out of that. I made some, but then I kind of sat on it too long, and I just kind of got out. I did trade the first one. Yeah, this went south quick. Sheesh. Honestly, though, I don't even remember when we were talking about it. It was probably a while back. I don't. What is this even about? This isn't. This isn't a split. That's a huge amount of selling volume. It's Booksy time. Can we see a recovery? It's hard to say because I don't know as a history of this ticker goes. I don't know what to rely on. I'm looking at just something simple. This is a daily chart. RSI has been oversold like this one time before in 2021. But there's really not, I mean, this is a big recovery over time. It took, what, like 3, 4 months? And it has a decent recovery. I'm not seeing a lot of rebound plays, though, here on this one. So it's a bit tough. What we could do is maybe, and again, there's like splits all over the place, so it's really hard to know. I bet if we went to a 4 hour, it might even look different because sometimes those charts do weird things. So this was in a bit of a widening. It looked like it could have had maybe a pretty decent move, but it broke down. And I mean, widening spreads usually indicate, well, it's exactly what you think. Volatility is increasing. You can kind of read between the lines there. So something's going to happen. And when it does happen, it's pretty big. And in this case, it went really, really low. Yeah, I mean, as far as trends go, it's sitting on the bottom. There's not much else to it. If it's going to bounce, now would be a good time. But I don't know if I could sit there and do like a retracement bounce because I'm looking at these other drops. These drops did not have, this one had a stock split involved, but this didn't, This didn't. I mean, and there's not really any strong recovery moves. So I feel like it's a volume and liquidity thing on this ticker. Could it squeeze? Go the other way? Yeah, that's true of any stock. But there is a pattern here. I mean, I'm looking back, I can see this, and this is a really bizarre looking shape. People will say stuff like TA is really subjective and blah, 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 blah. And I get that because there are times where you get into these modes and you're like, well, that's just something you're just seeing, right? You're not really thinking that that's a real pattern, but that's obviously the same pattern to me. And I'm not even like, I feel like it's not even that subjective. It's just kind of there, It's weird that it's like that. I don't even know why it would be like that. But to me, like that seems plain as day. And I'm not even a big, again, like, oh, it's going to do the same thing over and over again. But that's a really very clear, like, method of distribution. When you look at it from this point of view and you just think about, like, where is that sell-off happening, you can kind of tell it keeps revisiting the same marks over and over. And this similar but slightly more downward motion here really did the same thing. So, I mean, do we have an established maybe pattern of behavior on this chart that you could use? Sure, like it finds a mark and then it redistributes against it over and over again. I mean, that's an easy way to trade it, but I don't see that now because we just dropped. And there's not really a way to know probably where that's going to be. I mean, this didn't have any correlation to the previous zone at all. And it never came back up. You know, we had talked about this, I think, before this stock split. It was a while ago, for the second split here. And it does have some pretty nice moves there. Those are decent sized moves for a penny stock. But yeah, I mean, you're kind of running on fumes is what I'm trying to say. You're really looking at this like, hey, it's way oversold, therefore it's going to go back up. Well, maybe, but not everything is going to be your Beyond Meat where you buy it 50 cents and then it goes up to $7, you know. And I think there's a lot of that always in the market because, you know, folks are always kind of thinking about what they missed out on. So they're just trying to find like the next play. Yeah. So, I mean, like that's a halfway point. That would kind of be my argument, I guess, is it's traveled the full length down. So if it has a retrace, maybe it goes back up to 480. But it's subjective. You know, we're looking at patterning. We're looking at what we think may or may not happen. And there's not really any evidence that I can see super clearly that this should come back up for sure. Try to look backwards and see what I can see. So there's this. So this becomes like a halfway point, and it was already established as such. And then when it goes really low, I guess the argument could be that it came back up. So it has like a 50% retracement. But the thing is, it was already bouncing off that supply level for a long time. So you have that in your back pocket. Now, I didn't say it was going to go to 480. I just said observation, you know. Another way to look at it would be to take into consideration these splits and think about this distribution level right here. Yeah, don't put words in my mouth. I didn't say it was definitely going to go there. And I don't think that this is, again, not every stock is going to do the Beyond Meat thing. We kind of have to look at trajectories and see, and this could even be like way off, even if it did go like May. You can look at this distribution level right here and kind of see similarities in the way that this is a more definitive distribution. You see how it like sat there for quite a while, for several months, and then it just dropped. And then it goes down and establishes like a new plateau. Well, if that were the case, this could be a more important or more significant level, like right here, or off of just below that, because that's probably where that support was here. That's what it looks like. So since the split, and there's been a couple, there's clearly like a new set of numbers. So I think you'd have to look at that pretty seriously as well. And just consider, hey, even if it did bounce, like where would it maybe go? When we looked at this thing, it was like, I remember it being like 30 cents. So we're kind of back where we were. It seems like there's no desire for this to, like you have to understand that. Like every time it's splitting, it's going back down to like sub $1. Like the market clearly doesn't think this is worth anything. Doesn't think it's worth keeping on the market. So I feel like that's not a good sign, and you are really just playing with maybe a bounce. So yeah. So I mean, like that's a big retracement possibility, but you're looking at maybe this zone here. This makes sense because this is where it opened up. Right there, you can't see it very easily on the chart. I'll get rid of these boxes. But that's actually pretty darn close to where this opened up after that big drop. So here's the thing about Beyond Meat, right? When it bounced from 50 cents, okay, it did come back above and made like a higher high, but I was thinking at the time, it did something like this, right? And I was thinking at the time, you don't really know until it goes that it's going to go. And it went in like an extended hours point. And the reason that I said that is because with Beyond Meat, it had this bottom, but it had made like 3 consecutive lows. And there's not really a way to know for sure that sellers are done until you see it kind of break out on the top. So like the only way to know that it was going was that it would go up and make a new high. I don't know why I did that with the wrong thing, but it would come up like above here and then it would go. But at that point, it happened in like extended hours and it went really, really, really far, like really fast. It went like way up here and it never comes back and checks it. I mean, if you're just looking at like a daily chart or whatever, it kind of has this really quick move. There's not really any indication it was going to definitely run for sure, except for just hype. People were hyped about it. And I felt like it was equally as probable, just not, I was looking at, it hadn't crossed up what I was looking for technical indicators. I was like, it's pretty much equally probable this comes down and like bases out and builds like a range and then goes back up. So I had made a mark and said, yeah, maybe if it comes back to that 50 cent area again and it makes a higher low. Never made the higher low down there. It just stayed up at like 60 cents and then it took off. When you look at stuff like that from a technical perspective, it feels like a coin toss. There are other things you can do, and perhaps one technical indicator versus another, it showed maybe, oh, this crossed up. No, Books, you're wrong. There was a technical thing. This happened. Yeah, and then for every one of those, there's going to be another one that it doesn't do that, you know. You're really trying as best you can to kind of shotgun it and get the scatter shot, if you will, and just try to get the best picture you can get with all the little pieces of information that you have. And it's like, this could be a selling climax. Yeah. But why, you know? Well, high volume, it's way oversold. It's basically bottomed out here, flatlining. Yeah, but the price is still dropping. And we don't really have a lot of examples of it doing that in the past. Maybe back here when the liquidity was a little healthier, but here it just stays red. It just keeps going down. You see the problem. This is a daily chart. So this went this went oversold, like maybe not to that extreme, but it went oversold pretty fast. So this is what I'm saying. Like you can see right here, it sort of stops, it hesitates, it has this reaction. And I could have said the same thing at that time, like, well, maybe it comes up and then it holds support and goes right back up. Why not? It goes back and back tests this level. It never goes back to test this level because this is a chart that tons of short traders are trading and they don't want it to go. Eventually, I guess they don't feel like it's worth being on the stock market. So, you know, we look at something like that and you're like, well, it could go right back up there. And instead it does like the opposite. It literally looks like it goes equal parts the other way after maybe sort of a diamond. And all of that while it's oversold, right? So it does pop. It has a big reaction and that reaction is solid, but it's ultimately like down after that. It doesn't have like a continuation. So compare that and contrast that to how something like Beyond Meat, which got like recognition on like a meme channel, right? How that has this big bounce at the bottom and then ultimately very similar setup. Looks like it's going to go bankrupt all of a sudden and then has this huge reaction, 1,400%. Very different, right? So I think you got to be just kind of keep in mind that like, yeah, these are not unrealistic levels to come back here and retest or to come back here and check. There's obviously been a lot of liquidity built up over these last two stock splits here. For all the selling that's happening, there's also buying happening. So it's not unreasonable to think that there could be a market attempt to go back to those levels. But this is one in which when we see that previously, there's no inclination it was going to go back. Like, it just doesn't go back. So I have a lot of doubts that this just goes just because, right? It's sitting at 4 cents right now, which is really low. A dollar is up here, basically right off this line that I have drawn. It's $1.13. So I'm feeling like this isn't a bad setup for like a quick bounce, but I don't know if I would take it any further. And I'd probably just use like the most rudimentary of fib retracements. Yeah, like right there. That was kind of the first number we picked out. That's like 9 cents. That's a 50%. I mean, there's 100%, 4 cents to 9 cents, like 110, whatever, 125% or something like that, right? A quarter, that'd be one. So that's a big move. So if it does have a bounce at 4 cents and it goes up to 9 cents, you made 125%. It's huge. I don't know if I'd want a bigger piece than that, but I think that that's probably best case scenario. And then you have, just for now, because I don't think this is, again, like a Beyond Meat kind of stock. I think you just have like basics here, draw a line. If it crosses the line, there's a chance. You need to see it high or low. You'd see a candle, maybe the candle's engulfing, but you really need to see, and this is true, we talk about this on AMC and stuff quite often, is you really need to see the higher high. And so like, if you were averse to risk here, you would look at the previous green candle here, which is the low. The last time it had any support, really, strong support, you can see there's 0.056, and then right above that at like 0.061. That area is going to be a little bit of a wall. That's where there's been support and rejection. So, I mean, like the best situation here is you see a higher candle, it pushes up above probably this top at 6, since that was a reaction back up 6 cents, and then it makes a support and then it breaks it. And assuming this doesn't make a lower low, then it could potentially be a little more bullish. And that's really the move that you'd probably want to try to get. Being that it's a penny stock, could that happen like in extended hours? Could it happen when liquidity is really low? Sure. Given that it's a penny stock, could it happen, instantaneously almost, where you don't really see a lot of that movement, just up, down, up again really fast? Sure. I can't say how it moves. Not really. The only thing we have in terms of like inclination as to where it might stop, I usually use like a 50-50 bleed down and just see if that makes sense. We're pretty close to it right now. But if it went further, you could definitely see it going to like 3 cents if it doesn't hold the support. And I'm seeing a lot of potential there. There's a gap as well. It's not very big at this point, but you can see there's kind of a squishy middle right here. And I think that's probably, again, pretty reasonable to use. And that would be the one I would use. But this would suggest it doesn't get there till December if it just went at the pivot. I don't know. So that's what I'm saying. Like, even a reaction to 6 cents here might be enough for the market for now. And that's assuming that it gets that. And then there's really no way of knowing. Not yet. There's not enough here. Do I like contrarian plays? Yes. Do I trade them often? Yes. I made 100% trade on Google this morning, just buying the dip here and then trading it back up. Just bought an October 31st 300 strike right down here when it crossed the line. Sold it at the 618, which was actually a little low. It was at 280 something. This is 100% trade. I still have the mark from it earlier, the blue line. This was a 100% trade. I kid you not. From like here to here. That's it. That's all it takes. You don't need to have a bunch of money either. These were like, when I bought them, they were like 40-cent calls. So you could spend $40 and you would have made $80 on this trade. Or excuse me, you would have made $40 on this trade. Super straightforward. So, I understand like why there's an attractiveness to like certain penny stocks. They feel like they're going to be really cheap. And if they go big, you can make a huge amount of money really fast. But you don't need a lot of capital to make quick, smart trades if you know what you're doing and you're disciplined about it. I think you can manage that and keep your costs down. And I am trading it again because I think it's going to potentially, I'm not 100% on this one because it's got some cracks here. Like it dropped through here. I think potentially it comes back up. And this actually exceeded, Google did, in extended trading hours. It went really high. It went up to 299. There's another ledge here at 293 that just never got back tested in extended hours. And that, to me, even though that's not like the most significant of things, like you can see clearly this came back up to where that fair value gap was right there. Doesn't mean it has to come up there. I think there's a lot of liquidity left on the table here that wasn't traded. So I'm thinking about that in terms of like, where do the traders maybe want to go? And there's certainly obviously a lot that was left on the table back here as well. But where would a bullish trader maybe want to go to sell shares again? And it would probably be up top. So maybe around 299 down to 293, assuming that it didn't go any farther for now. Yeah, it's, this is probably overbought this morning, like way overbought. But you can make 100% on an overbought trade that drops, the morning after earnings pretty quick. You don't need to have, the luck of the Irish, so to speak, and just have it kind of be in at the right time and just, I feel like this is possibly a bottom. It's not a bad trade, but I might leave it at that because I don't really want to estimate that this is going to go anywhere given the history of this. This isn't really comforting, These kind of rebounds are pretty meager. It's almost always making lower lows. There's really no history here outside of these bigger swoops, and those are in the past, So, and I don't see anything here. I think we talked about this with WTO, but I don't really see anything here. I can make something that looks right to me, but I don't see anything that ultimately would be realistic TA. I'm looking at these stock splits, just thinking about how that may have affected, the price and the liquidity on this thing. And I just don't have any real guidance here. So I don't think it's a bad trade. I just think, because you're right, it's oversold. This is really oversold. But I just don't have any evidence that matters that much to this particular ticker. I also don't have evidence that it actually stops going down just because it's oversold. Like, this is historic volume, at least compared to what it was. So maybe that's the difference. But to me, this is probably one of those tickers that you buy it with $100 and you're comfortable losing $100, over time. And if it ever goes, then you're happy. But this isn't one that's kind of a gamble, right? Maybe this is a good time to buy it, but that's about as far as you can go. Yeah, so the elephant in the room with AMC and GME, I'm kind of over it, and I'm feeling like that burnout setting in again. So we had a pretty good stint for 3 years of me doing nothing but pretty much AMC and GME, and then I started feeling like burned out, and I wanted to shift over and work on trading strategies and just trade. I did, and it was successful enough. It took me 10 weeks, but I basically grew my account that I started with by about 650%, which is great. I went from 6,000 to almost 5,000, or 600 to almost 5,000. Then I had a really bad week this week. I dropped about 1,000 of that, and I had a decent week the week before. I had about 500 to it, but then I was like, one of the problems of this has been I've been trending lower. So what I decided to do was chart so that I could have a metric and chart my progress. So at first, I say something like, well, I traded at 73% win-to-loss ratio. That's true. If you look at the number of trades that I've made, 73% of the time I've been making winning trades. Great. Good number. The problem is that the losing trades were much higher in loss. So it could have been way, way higher. Like I could have made way more on that over time. And the problem there is just lack of discipline. Like I would take a trade and then it didn't go my way, and I would think, well, I could average down or roll it over, and I'm not really counting the cost as it adds up. And before you know it, instead of having a $300 trade, you have a $600 trade. Well, that doesn't go your way. Not only are you now doubled down, you're going to lose obviously double the amount, and so there's a chance, yeah, that rebounds and you get a big portion of it back. But if you don't have a strategy in play, then you're really just throwing money down the toilet. Instead of just taking the $150 loss, now you're going to take a, $300 loss, and now you're mentally and emotionally more attached to that trade, and that's a problem. So believe it or not, actually one of my biggest losers has been Tesla. Tesla is a tough one for me to trade because it does not, I think I'm just realizing it doesn't adhere to the trading style that I like to trade. It's not about me conforming to the stock. It's so much so as it is, that is what I'm saying, I guess. I can't conform to that ticker. I've tried it and I like the volatility behind it. I've seen the moves. I've seen how explosive they can be. I've made money on it in the past. But then when I lose money on it, it's like I can't read bottoms on it. I can't read where do you leave the play, right? That kind of thing. Will you leave it when you get red? Yeah, but that's a problem. So those are things that I'm taking as learning experiences. And I did this for 10 weeks. And after the 10th week, I spent 2 more weeks, made some money, lost some money, and then decided I need to pause and kind of reset because I had a really bad week, and I thought about why that was, and I realized there's multiple things going on. One is that I had a trending down in terms of profit. So it was more consistent in the beginning. I was consistently making 50 to 100% gains, and then over time it starts getting more volatile. So I'm winning more than I'm losing, but we're actually trending down. And it's kind of like this, right? Where you're expanding. It's kind of like a widening, right? And so even though I was making money over time, I was basically just trending. So I was doing this, right? And then it's all of a sudden I'm blah, 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 blah. And this isn't bad because this is profit, right? And my zero line is here. I didn't cross zero for the first few weeks. But so this looks bad. It's all still ultimately the account value is going up. But what that does is that means that your account value is doing this basically. It's plateauing. And what that also means is that at some point that trend is going to shift, because if you keep going down like this and you don't make a correction, it's like a bottom, right? So I'm charting my own. It's weird. I have a chart for my own self. So I know charting, so I understand that. If you don't make a correction here, then eventually you could be in a situation where this kind of crap starts happening, right? And this no longer is positive. Now it starts coming down back to earth, right? This is not sustainable. This is plateauing. And those kind of gains, yeah, it looks like I'm doing really well, right? But then you get to this point where you're oh, it's flatlining. And I never got negative, but it's yeah, you're going to get to a point where eventually that could turn south because this trend is bad. So I stopped. I'm not going to do it right this second. I'm going to take a breather for a minute and reset my account a bit. And I'm going to go back to the early days and see what was working very well. And then I'm going to go to sort of the later days and see what I was doing wrong. I've already kind of taken apart a bit what I think I did right and wrong, looking at successes and failures. I know that I beat the market, so I'm happy about that. If I had just put my money in an ETF, I would not have made that much by far. So that's good. But again, that overall trend wasn't good. I know that Like I had more wins than I had losses, but I also know that my losses were becoming bigger and bigger and bigger. And my wins were kind of getting smaller and smaller. Like I was too quick to take profit, and then I was also too slow to get out, which is a very common thing that you hear, right? With people that day trade that don't ultimately do well. So that's not good. It's not a good habit to be in. I also noticed that the types of trades that I make were changing. Like this trade right here took so little time. It took like an hour of my day. The rest of this trade now is like taking up the rest of the day, right? You're trying to wait for an entry or watch it. Now it's like this trade was really like 10% of the day, and I was fine. I made 100% on a trade. I could have been done for the day. If I had had confidence and put more money in it and yada, 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 then I would feel secure in that trade. This is one type of trade. This right here, this kind of long form creek cross, looking for a new upswing, that's a different kind of trade. All right. So one's a rebound. It's very quick. One and done. High volume and after hours trading. It drops right at the market open. People are taking profit. It's going to rebound. People are going to want to get out higher. And typically you can go back to the opening of the day and I just did a 618 retracement on the opening of the day. That's all I did. That's how I traded it. Waited for the candle that crossed up. It's super simple. Tons of other traders do that. It's really basic. Okay. But I was looking at this and I'm thinking like, this is a huge waste of time. Like huge waste of time, to sort of sit here and babysit this. And I felt like in the last couple of weeks, one thing that really changed was I started shifting my attention back to AMC and GME, really starting back here in September. It's been almost 2 months now. I started looking more backwards at AMC and GME and trying to get this chart right and nail an entry to this and yada, yada, yada. I didn't really pour any money into AMC beyond just shares here and there. I bought shares at 260s right here. I'm just kind of waiting it out now to see what happens right here. But I was like, not really doing anything. GME got burned on that because I was thinking it was going to go up. And probably, I don't know, I thought it would consolidate here at 6. I didn't think it was going to go straight up, by the way. Oh, crap. We lose our connection? Or what? Get out of the Discord. Maybe we didn't. I'm just overreacting. Probably fine. Who knows? Yeah, we're fine. All right. It's just the loading thing. How do you even... Oh, this guy is trolling. Great. How do you even respect your analysis when every prediction of the past year has been wrong? Are you basically drawing up and down? Like we see on the screen now, it could go up according to the fractal, which never will, which is 90% of the time. First of all, try harder. This is not hard to critique, but you're not critiquing the right things. So, one, how do I respect this analysis? Because I just told you, like I've used it and I just made 600% on a 10-week challenge for myself elsewhere. So how do I respect it? I try it out and it works. So first, you've lost there. I'm sorry. It's actionable. It's an actionable analysis. It works. Second, I don't control the stock market, and sometimes when I do things, it's not prescriptive, it's descriptive. So you're saying like everything is wrong. Well, first of all, that's a universal, which is a huge red flag for me. That tells me that you obviously haven't been here this past year. You're saying that you've been following it, and you're saying that everything for the past year has been wrong. That's not true, frankly. So again, you're kind of like shooting yourself in the foot by not at least giving me the respect of being honest. I called out 4 when we were coming down. We went to 4. Okay. I called out 14 when we were coming down to twos. I bought it 247. I sold at $10. I called the top here. It wasn't the top that I wanted. It's not the one I wanted the most, but I had multiple markers here, and the lowest marker was like 556. And then I was worried that we might not go, right? If you go back a year ago, it's funny that you say that, because if you go back a year ago, you would have seen this on the chart. You would have seen this. So there was this chart right here. This is about what it looked like. I'm purposely putting it over to the side because I don't think that it's fair to be dishonest about it. This is not what I thought, right? This is actually, or excuse me, this is not what I thought would happen over here. I had here this marker. I had another at the top. I remember it went up to about 6 something. And then I had one that went to 8 something. And that was the one that I was kind of favoring because I was thinking we were going to have an actual like big reaction backwards 1 second time, because I thought they left, again, a lot on the table back up there around 8. And that was it. That's what the chart looked like. So you can say what you want to say about me, and you can say that I've been wrong for a year straight. I also know that in January, but I know that's not true. So it's not going to get under my skin if you're just trolling. And it doesn't make me disrespect myself or something like that, or doubt myself. I don't doubt myself. I'm going to win whether you're here or not. Like, I'm going to achieve what I want to achieve, whether you agree with me or not. Like, you have zero say on whether or not I'm successful as a person. And so I'm telling you right now, like, I'm going to make it work. I'm going to do well in life. I'm not going to worry about this conversation after it's done. But I do want to stress that, like, the biggest call outs here, the 2 biggest moves that we made in the last year, I called them out. So, like, you can say whatever you want to say. It's not about a broken clock being wrong, right, twice a day or something. It's really about probability and mathematics, and the fact that, yeah, you don't know what's going to happen. Sure, Booksy, but I'm sorry. This is absolutely what I thought was going to happen. And I'm not going to apologize or pretend like I'm wrong all the time either. You don't pay my bills, dude. Like, I know that this is what I had on the chart, like way back here. And I could go pull up a chart and show you this, and you wouldn't care. You'd probably just leave and it'd be over. I know that this went a lot slower than I thought it was going to go. I think the timing here on these wave schematics has been really slow. I've said it multiple times in different ways. Once we pass that August-September bracket, I don't have a lot of hope. Like, I haven't had a lot of hope that this is going to just turn around and run. And the idea of it going straight up 99% of the time, you're looking at this thinking that you're wrong. But that's not how I look at this. I don't look at this as you're wrong, Booksy. It didn't do this. If you're looking at it this way, because I'll tell you when I think something long-term is going to happen. I never once, as far as I can remember, there was like one little thing right here where I thought if it somehow held up, it's possible it could just go. That was the only time that I thought it was possible that this could just go back up. That was it, period. That's it. There has never been another time. If you go to January of 2024, I did a wave schematic, and that wave schematic was huge. It was like at least 2 years. And the wave schematic basically suggested that you would come up and then come back down again, right? That you would hit $14, then you'd come back down to like $2.50. I could make these numbers up, guys, but I'm not making them up. I could say it just because that's where we did end up happening. But I'm telling you the truth, and I don't really care. If you don't believe me, whatever. I'll go find the stupid video, and we can look at it together. You know, like, what do you want me to do? I do this every other day with people because everyone wants to come in and say, you're always wrong. And I'm like, yeah, that's bullshit. That's not true. It's just not true. I did a huge, large form wave, and it really had us going for a long time. And I've said repeatedly, I could not have said this more if I tried. I have said repeatedly that March 2026 was where I thought the wave was probably going to end. That one doesn't even need a timestamp because I think I've said that in almost every single video that I've ever had. February to March 2026, I've not changed it. I've not pushed that back. I've not made that excuse like, well, it hasn't happened yet, so it's not going to happen. Yeah, it's there, but I'm not kicking it down the road because I think it's right. I'm not 100% sure on anything in the market, and I don't know why you would be. But I've never, ever changed that. And I think that on the big picture, like the idea that this is another schematic that I've drawn like so religiously that I'm getting so sick of it. This one. So you're going to have to try a lot harder, I think, to kind of prove that everything I've said has been wrong. Like this is it right here. Like this is the one schematic I've drawn a bajillion times on this channel. I can't even tell you how many times I've drawn it. It's innumerable at this point. Probably over 1,000 times, honestly, because I've been using it for like a few years. It has to be over 1,000 times that I've drawn this schematic. What do we look like right now? We look like this schematic. Like, I'm sorry that it didn't go up to $8 here, but I sure as heck didn't think that it wasn't going to come back down. We talked about that way back here. That, yeah, there's a possibility this comes way back down. In fact, a lot of times this is what it looks like. Oh, I'm worried, if it doesn't break back out here or hold a higher low here, it's probably going to do this. And then that's what happens. So first of all, prediction is different than description. I think first of all, I've made like 12 points now. 12th of all, prediction is different than description, okay? This is not for you to go out and buy calls and buy options because you want to get some guru in trouble for giving you financial advice when that's not what they're doing. That's not what this is right here, okay? I am not a fortune teller. I am not the God Almighty. I do not know whether an operator is going to run it here or here or here. What I can tell you is what I can measure. What I can measure, I can see as a possibility. This right here is not prescriptive. Yes, if it happens, great. Wonderful. Awesome. I will make plenty of money. You might make money. I don't know. This right here is not prescriptive. And this is what is required. If you come on this channel and you look at this chart and you snapshot this chart and then you walk away, this is what's required of this channel, okay? An active thought process. You need to have cognitive ability on this channel. If you do not have the ability to think for yourself, if you do not have the ability to sit and listen to an explanation of what this means, then do not come on here. Just leave. Unsubscribe, be gone. Like, it's super easy because it's going to waste your time to come on here and look at the chart and say, he thinks it's going to go up here. He thinks it's about to go to $6 right now. And then you're going to come back in 3 days and say you're always wrong. When in fact, what this is and what I've used it for is a way of describing, not prescribing what I think is exactly what's going to happen, but describing what this looks like and where those markers are. The reason that I have alerts where I have them at $2.79 and at $3.02, that is not for you. You don't need those alerts. Why do I have those alerts? Because I'm looking for specific things that indicate a change in character and pattern. Until you get the change in character and pattern here, it will continue to iterate. I said it in the Discord multiple times. I've said it on here multiple times. If it continues to iterate, the current iteration is down. It is not complicated. The current iteration is that stupid drawing that I've made a bajillion times over and over and over on this channel. So get it through your head. If you're on here and you're just looking for one quick answer from a guru, right? And if he doesn't do it, you're going to try to throw everything you have at him to make him feel self-conscious and worried and defensive and blah, 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 blah. Tear his little empire apart, right? Because I'm mad. Listen, I'm not at all threatened by this because I know This is the iteration right here. It is present again and again and again until it is not. Where are you going to buy in? You're going to buy in where it is not present anymore. Is it still iterating the same thing, Booksy? Ask yourself that question. Is it? Yes, it is. Do you not see that this is a creek cross followed by a buy up that then sells down into a distributive action, has a bounce out, and then potentially, though we're not there yet, right? This would be like a phase B bottom. We're not there yet, has a bounce out into a spring. Yeah. Okay. How does that look any different than what we see on the big picture? In fact, how does that look any different than what we see on the macro, the super macro? My argument over the last 3 years has been one simple fact, which is that your operator, and this is why I don't like fractal analysis. You said fractal analysis, like fractal analysis means something. I abandoned fractal analysis a long time ago when I realized that fractal analysis does not do a good job of describing what happens in a wave. It doesn't do a good job at all describing what's going on with liquidity. It does nothing. A fractal is 100%. Somebody said it in like one of the first videos I ever made in 2021. They were 100% correct. I was wrong. They said a fractal is empty. It means nothing without the liquidity around it. 100% true. 100% true. It means nothing without the liquidity around it. It means nothing without understanding where it is in space, in time, basically in the scheme of this chart. Where is it? It means nothing. I don't like that. I like the idea of wave analysis. That makes sense to me. This is a wave bottom. This is probably a wave bottom. That's why it looks so similar. Could it inadvertently become something else? Sure. Could this be a distributive action right here and another distributive action, another distributive action, and another distributive action? Yeah, it's possible. Does that mean there's 4 distributive actions? This could be a cat ear down? Yeah, if that's what you want me to draw, that's what I'll draw. But the thing is like these things right here that we're talking about, this is absolutely 100% in line with what we're already talking about. Like the fact that this looks like this disturbs a lot of people, but it's already like evident in the chart. When I think of fractals, I think of exactly the definition of a fractal, which is something that is nested inside of itself. It's made up of the parts. It's a behavior pattern. This is not just some little doodle on the screen that's meant to make you feel like you understand everything that's happening. This by itself doesn't mean anything. It has to be in the context of like a bottom of the range, a top of the range. And when it doesn't go your way, you could either sit there and say the fractals were wrong, or you're always wrong. It didn't do exactly what you said it was going to do. Okay. Or you can look at what is it really going on here that's causing it to not go the way that I think it's going to go. I can tell you right now, this is not always accumulative. This is distributive sometimes. When there's weakness in the middle here, and there sometimes is multiple weaknesses in the middle here, a lot of times this comes back up, and then it sells back off again. Well, it didn't go back up, Booksy. Then there's other times where this can push up, and it can have a creek cross that's nice and healthy, and it gets to the middle, and then it has a nice big push out, and then it holds support, and da-da-da-da-da-da, and it's great, right? And then it sells off later. I've seen every single example of these on AMC, but what I can tell you is that this is an operator signature. It's like a thumbprint. How is the operator checking liquidity in the range? This is pretty much the model for how they're checking liquidity in the range. I don't need anyone else to tell me otherwise. I've had people come on and tell me that they have the magical answer. They know exactly where this fractal is. They'll tell me, oh, it's over here. We're in this little spot right here. Oh, it's over here in this little spot right here. Oh, you have cat ears, but our cat ears are actually right here, and the rest of it matches. Of course it matches. It's a fractal. Like, it always matches. Always. So what is going on with liquidity here? How are you adjusting for what we see as a shift here? That's the real question. If you go back and you look at this thing, I know you don't care if I'm right or wrong. I'm not moving on. I'm talking about the whole chart. I'm making a point. This particular setup right here, right, has already rejected, in my opinion, and this is an opinion, off of the bottom. Really what we're looking at is we're looking to see if it's ever going to come back up and recapture, right, those higher moves off of this bottom right here, which was from 2020. We're already in like a double bottoming kind of a spring, if you will, or at least a gigantic phase B bottom if you're really bullish about it, or you're in a friggin' LSPY and you're selling off, right? I don't need all the answers to know that historically AMC still likes to come back up and check certain things even when it's bearish, and I've said this before. So if you come onto the chart, onto this channel, and you say, well, he's wrong or he's right, it doesn't matter. You're right. It doesn't matter if I'm right or if I'm wrong. What matters is whether or not my understanding of how the liquidity is being checked within this setup makes sense. And I think it does. And I'm not going to apologize that you didn't make a money on, October 3rd or something like that because of the warrant thing. I don't know what happened with that. Do I think that probably changed the pattern of maybe how things were being traded on GME? Probably. It went into like a vacuum state after that date. Do I think it somehow affected it? Sure. Did you have that in your consideration before that date? No, not really. So how do you reconcile that? I don't reconcile it because I don't need to. Because ultimately it's still range bound. Like you look at GME, you tell me like, is it breaking down or is it breaking out? It's doing nothing. It's range bound. It's tightening around this kind of a noose right here, which goes back to like what was going on in June and July of 2024. That's a long time. We've just been kind of consolidating. Yeah, we've made some moves up. We've made some moves down. But ultimately, have we done anything? Not unless you're like paying attention. You would think no, we haven't really done anything. Liquidity wise, we've done a lot. This was a big deal. Going over the top and then dropping back through. That's a big deal. The wave hasn't finished, but I don't know if you knew this, but like AMC and GME were kind of not in sync with the waves. And I've been talking about it here and there, but they just don't quite match up. There's some things that are really close. Like the concept of the August 22nd kind of pinpoint was a really big deal to me because it's like there's something there that's causing this sort of a compression into this point in time, but then nothing happens. You're like, well, what was that even about? I look at it and I'm like, I see it as continuity because I'm like, yeah, this is still like a vision of what we're seeing trading on the macro looks like. I don't really see it as a problem. But ultimately, like they found something here that they wanted to test and they busted through it. And it's a multi-year trend. And I can't control that. Is it because of October 3rd, that announcement, that they decided to take it lower, take advantage of it? Is it possible for an operator to change their mind? Yeah, it is. So then what? You're not playing with all the cards. The operator is. You get to see little bits and pieces of that in a thumbprint, and you're left wondering what else is going to happen. I'm sorry. Like, that's the nature of the market. Anyways, my point was in saying this, and this is kind of where I'm at right now. He specifically pointed to the chart, and he said, you didn't know what was going to happen here. You got an up and a down. Fractal says it could go up here, so you thought it was going to go up. No. That is a really, really misinformed view. That is not what I thought. If you've been following me on the Discord, you know that I've been talking about parallel structures here. And I've been talking about how like every single time this has made a move up, right? What we're doing is we're back testing and we're resetting the structure. So every time this thing is pumped, right, it's going back and it's basically just walking down in the same exact pattern over and over and over again. Multiple times, these parallel structures. We're pumping up. We're doing a creek cross. This is the nature of what I think is actually happening. This is the predictive nature that we're going to do a creek cross. We're going to come back up and retest this drop ledge. That's what happened. I didn't get it wrong. My timing was a little wonky. I think I was off by a week or two, but It was there. That happened. I think he's going to come back up and hit 4, and then it's probably going to drop down again. That happened. At that time, I pretty much was saying the same thing. Like, I was like, it's probably going to look like this and then come down low. That's what happened. There's, I don't know what to tell you. Like, if I talk about what would it look like if it didn't go low, that's not me saying it's not going to go low. That's just me like hypothesizing, like, here's what it would look like if it doesn't go down. Every time this has happened, this has been doing the same thing over and over again. So now you've got another creek cross right here, right? There is compression into this point, and it's there. But that compression into this point did not yield a breakout. Unfortunately, all it did was yield this push right here. This push right here is not insignificant, though. If you're only looking for one thing, you probably think that that's not a big deal. But if you're looking like at a bunch of different things, you're probably like, well, it was, kind of a back test on more localized creeks. Like this one, it hit. But if you look at like the big picture, like I've got one line right here going through it all. There's another one that goes back to like the opening value. I don't have it on the chart right this second, but it goes back to like the opening value of the ticker after the split. Specifically like right here. I'll tell you where it originates. I don't know if I could doodle it from memory. I'll probably get pretty close. It originates right. Oh, I can't see it without the other thing on. Hang on. Yeah, I think I'm missing it because of the time frame. It's around the daily. I think it originates right here. There's a marker here, and you can use it on your own. And this is one that has been pushed a few times. What it represents to me is a liquidity anchor, like a shelf. We talk about those shelves. There's another couple right here. One's at like 15 something up top, and then there's another one right here at 1330. There's a second one right here at like 1060 or something. I don't know. Sometimes we revisit those quickly, sometimes we don't, right? This is the model, okay? So every time you jump this creek, there's another one right here, by the way. Every time you jump this creek, you're going to have a big push up that goes back to the top of the liquidity. It's going to check, presumably, on these levels, that you had previously. And there it is again. There's the parallel. It's right there. It still exists. It existed back here. Where does that go to? Does that go to the previous all-time low? I don't think so. It doesn't really go anywhere. Maybe on the shifted chart it does, but I've never checked it. The point is, like, every time it's jumping this creek, it's back testing. It's doing the same thing. But look at what has happened. We've consolidated now to where the macro, which is the big picture, right, now seems to match to some degree what our expectations were. Because originally you had this idea, even if you were doing this diagram with the sell down, that this was probably going to happen. So you're thinking, well, maybe it goes low at the end, right? And you see this kind of go down. I distinctly remember saying that I didn't think it was going to hit bottom here, that it was going to react before the bottom and go back up, because it's an action of distribution before pushing down. So you would come back up and check that first, and that's what happened. And then over time, yeah, you'd come right back down, but it didn't do that. Instead, what happened is it starts this slow-mo version of this whole thing. It goes really slow. And what I've talked about more recently, and I'm doing a lot of like, I said this, I said that kind of stuff, but I have, was that this is basically like 1/3. So if you were to take this and measure out functionally like this distance versus this distance here, you've effectively got about 1/3 of the distance. It's a little bit more than 1/3. Okay. So what I did is I took this marker here. I'll change the color on it if it helps. What I did is I took this marker and I said, all right, well, if it's, fractionally changing every time, then we should be able to predict pretty easily what the final marker is. This one actually looks way bigger than 1/3 the way I drew it. I should have made it from the creek cross because I think that's the more accurate way to do it. Because this was a really long setup before the creek cross, so I kind of jacked it up. But anyways, I digress. It's like marginally bigger than 1/3 when you do it correctly, or at least when I did it correctly. So I took the same thing, and I'll just do it similarly. It's like a little bit bigger than 1/3. And then I measured it out, and I said, all right, well, this should go about 1/3, further if it does it again. That measures out till October 20th or something. And then I said, like, well, there's another one, and that one would measure out to like October. So again, this is a little wider than it should be because the previous one went to here for sure. And it was right. It was pretty dang close. It was off by like, I don't know, like a 2-hour period. And then I did it again, and I said, well, it should be kind of ending. There shouldn't be another iteration, at least not a big one. It should start getting really, really tiny after October 24th. So tell me what's happened after October 24th. Then we can have a conversation that's more critical. Because on October 24th, you've got this bottom here. When you get to this October region, it again sets up high. That's not different. Every time it's come back down and made a sell-off, it's set up high. On this particular parallel structure, it does the backup. Everything's the same. This is no different. There it is, right there. Like everything's going, quote unquote, prescriptively. There's nothing that's changed, though. So what were you looking for here that didn't happen? The same thing that I was looking for here that didn't happen. The same thing that I'm looking for here that didn't happen. So are you just wrong every time? No. What you're doing is you're waiting and you're observing to see when it actually does happen so that you know it's happening. You don't have to do that. You can just sit back, buy some shares, chill out. All good. Okay? Or you can just see that the fundamentals of this stock are screwed up and just short it to death. Right? Like, pick your poison. Decide what you want to do. I don't care. All right? The point is like, these markers have been consistently doing what they have been doing the whole time. Now it's becoming more and more apparent, as you can see, that there's almost like a head and shoulder, right, bounce that's going on each time. And sure enough, if you go into like the more micro view, let's just do like a 1-hour view, you can start seeing that patterning as it playing out like on a smaller scale, like each time. But something changed here. They made that sell-off. That's the big push-up before the sell-off. They did something like that right here as well for the sell-down, the sell test. They make 3 consecutive lows, 1, 2, 3. There's like here, 1, 2, 3 on the way down. But there were 2 distinct changes. One was that the second push here went higher. That's only happened in one other place that I can remember, and it wasn't a good thing when it happened. And I said this before, although I'm sure a lot of people are going to say that they don't remember me saying this because it may only come on every now and then. This is the only other place like something like that happened, right here. And I don't know if you guys recall, but this was one that jumped a creek early, and then it goes over like a secondary creek here. This was around earnings. And at the time, not just me, but other people were also like, it looks like it changed character. But then it goes up and it does a bigger move in order to do what? To sell down low. That was the final move. That was the move we were looking for that we thought could go high, but it might not. Who knows? It ends up going to the lowest possible spot that I have on my chart, which is basically just the roof of the liquidity. It doesn't go anywhere beyond it. And then it sells down below the range and it's done. If you do something similar here, again, not saying it's definitely going to happen, but if you do something similar here, where's it going to go? Hey, look, man, if you guys want, I'm being a little bit of a jerk now. You could use another word if you want. If you want to do it on your own, do it on your own. Like, I don't have to do it for you. It's not a job for me. Like, this is just purely like me doing it. I'll tell you that this is entirely possible. I'm not going to BS you. And I've said this before on the channel that it's possible this goes down to 180. Maybe not as low, but it's definitely a possibility. What is this? This is how it builds out and does the exact same thing it just did here again. Well, I thought the iterations were done. You just said they're getting like super compressed. Oh, they are. They are. But do you remember when this just happened recently? Right here, they are also super compressed. So what's going on? Are you just wrong? You can't track them? I don't know if I'm tracking something that should not be tracked, and that's part of the reason that this is a problematic thing. But I have said, and I will say continually, that tracking iterations is kind of like secondary. It doesn't really do anything. It just gives you some information. It's just information. If I can track an iteration and count it perfectly, I can get a huge trade out of it. But you don't know what you don't know, and a fractal is misleading because what you see here is truly an iteration. It is. And does it get micro? Yes. The problem is that every iteration is going to shrink, just like this one shrank into the bottom, just like this one shrinks into the bottom. So if you're tracking that iteration shrinking, you might be thinking, well, I'm in a spot where I have like some kind of superior information. Like I'm going to be able to tell you exactly when it's going to stop. Yeah, like I told you that, I think I said it on Discord a few times, that if it continued to shrink at that same pace, it would stop at earnings. Like it's really, really close to earnings. Anybody in there, your grandma could say that earnings could just be a catalyst, right? Why not? Like, it would have been easier just to say that, Booksy. Just say that. Well, I didn't say that. I was looking at something really different from a technical standpoint that a lot of people probably don't want to do. And it's not the most fruitful thing because you could be wrong, about the scale of it. But ultimately, like this one, I was doing that 1/3 reduction. I kept doing it. And what I said on the Discord was that I actually said this back in early October. I said it's gonna get weird before the end. I said it's going to get really weird because typically what happens is that if it compresses and it doesn't change character, it often goes parabolic down, because when you're going into spring mode, what is the model of this? The model of this has been cell testing. We have a push on the top. There's a time of accumulating, probably shorts, right? We have a big push down. This is roughly like a 50% retracement. But you get this big push down, you break out, and then you do it again. You're accumulating, then you push down, you break out, accumulating, push down, break out. Now, it's not going so far as to say, like, it couldn't be an accumulation, because that's not true. For every top, there's a bottom, right? So you have to think about this critically and say, well, if that's the case, then we're all just screwed, right? No, because historically, this would have, on average, if you were just trading shares, this would have an average of about 370. It's not black and white, right? An operator who traded both tops and bottoms, if they're going to eventually take it up, they don't care because you're going to leave the range in a markup. They're not going to sell their $4 shares for a loss or $5 shares for a loss. They don't need to, though. You've got plenty of accumulation down here, right? Plus, you're going to be able to move the stock when you want to move it. If you're going to go back up, the institutional money is going to push it. That's the nature of markups. And they've got tons of ammunition all the way up, okay? But my point in saying this is that the model here has been sell test and sell test and sell test. And every time we've done a sell test, right, we've pushed down through these parallels. And the only change that we've seen recently was right here. This change, which is the second top, there's two big buy-ins. The second top went higher than the first. And I thought that was unusual. I made a point of it. It also jumped this longer-term creek that I don't have on the chart, so that's not very helpful. But it jumped a longer-term creek, jumped a shorter-term one as well right here. You can see that. It pushed up above it. There were a lot of little things. That's a change of character. I took note of that. The next thing that happens is really important then, because if you go down and this is the true phase B bottom, it is possible that this initiates a spring here. But in order for this to be true, and here we come to the present tense, in order for this to be true, it has to then maintain, it needs to come back above at some point. Could still happen, but I don't know. It has to come back above 267. It has to confirm that as support. Then it needs to make the creek cross right here. This is what it would look like if, not prescriptive, but descriptive, This is what it would look like if this had happened off of this bottom. You should have had a support here. Instead, we dropped through to 266. We closed low. I made a point in the Discord group to say it closed below the floor. That's not really a great thing because it's either going to rocket tomorrow, which is now today, or we're going to be bearish. And I'm not saying that in like a short-term way. What I mean is that if you're not going to go up here, meaning you made that dip casually and you rip the other way, has to be like a rug pull on the shorts. If you don't immediately come back up, push 280, hold support over 285, push 295, and then make your way up through these parallels again. That's the reversal here. It's the same thing that we were talking about when we came down here. There was an opportunity, but it was not taken at all. There was an opportunity right here to make a higher high, and they didn't do it. Right here. It had to make a higher high and then push back out and go ahead and make the creek jump. What you see is exactly the opposite. It makes a lower low, and then it has distributive action. Multiple wicks and distributive actions, not only above what you can see as a moving average, but ultimately above that creek that was lost. See how it dropped back through the creek here? Could this have just been a backup? Yeah, but it has to make the higher high and then jump up and over and start advancing. So if I drew this at that time, what I'm saying is that that's what it looks like when it's breaking out. This is a key and pivotal moment at the end of this sequence. If it doesn't do that, then you're going to do the same thing again. Now we're in this position where, at least to me anyways, it seems really clear that this change of character up top has initiated some serious drawdown. The first thing I noticed when I saw this was that the first backup after this drop, it didn't go back up again. Instead, look where it rejects. It once again rejects on that creek. So this time we don't even get like a second buy-in. If it is there, it's super weak. Maybe it's in this top, I don't know. But I don't really see it. I don't see a second buy-in at all. And previously we've gotten some pretty big second buy-ins, like where they go way back up to retest certain levels. This one does not. It stays like a head and shoulder almost. Very similar to what we see here, almost with a head and shoulder kind of a build out, right? You see the iteration again. And this time it just drops it. And then when it drops it, it goes really low. Now, I don't know if you know this, but a Fibonacci is always like what the Fibonacci sequence is. It's kind of like A plus B equals the next, number. So it's like you basically are adding the previous number to that number, previous two numbers, and you're getting like the next one, right? So that's the sequence in a nutshell. Hopefully I didn't say that wrong because I know what I'm thinking is correct, but I may not have explained that right. But it doesn't, the first two don't change. So like the first two are always the same number. So if you look at a proper Fibonacci, you'll notice that the first two numbers in the Fibonacci sequence are identical. I thought this was really odd, and I knew that this maybe meant something. I don't know exactly still, but I looked at this and I thought, all right, you have here a change of character up top. I knew that mattered. I said it was probably going to get really weird and really bizarre. The volume has been increasing like incredibly. So far, yeah, it's getting weird. You got these 4% moves with sudden rug pulls, right? There's a compression that's going on that's almost untrackable. Like you can't really follow it very easily. Now you're getting to this point where the shoulders on these things are basically like nothing. You can see like there's a head and shoulder there. It's complex. There's even like a little head and shoulder on the top head and shoulder. It's there, but it's basically like nothing. And you get this massive drops. They're not dropping with shallower drops. When did that change? I know exactly when it changed because I was watching it and I told everybody this is changing. After this pump right here, they went back down through right there. They went right back down through the bottom. In this case, when it dropped below, this was the first time that we saw a break of trend. Previously, this had been higher up. Like this had been a higher low than the previous two bottoms. So if you draw on the previous two bottoms, it almost looks like it's curving up. This one does not. It goes through that bottom. like immediately. I attributed that probably to this massive push up that happened. Now it's come back down through that floor right here. It's not holding it. That's a big deal. And I did that in extended hours, and in extended hours, it's even more subtle. It's like barely going below this, I think. I think that's the way it reads. It's like the opposite. This is important because it's no longer making the higher lows at the same pace. Previously, it had been making them higher than you would draw a trend line. So if I drew a trend line on the previous two bottoms, which is already here, you can see that that low is very, very high, right? And I thought that was interesting. Something's changing. It's shifting direction. You have this big push up that comes out of quote unquote nowhere. It doesn't come out of nowhere, but it's too big, right? It goes too far. And then immediately you start breaking below the expected trend. That's a change of character. If you do not get a reversal, right, on this floor right here, which is at 267, where is the next phase B bottom? We've already talked about it multiple times. It's 246, right? Go back to, and that's where I've got this little green marker right here. I don't know if you can see it. That's the next chance, in my opinion, if it doesn't reverse between now and then, which I don't think is very likely, right? Because I don't see why you would in the middle. Although I did find 251, for whatever reason, 251 is a very common number that comes up in the targeting. I didn't see it as very likely that it stops anywhere else. So I'm not going to say that, but like that's why this is on the chart. This is not correct. It didn't have another push up here, or at least it didn't go that high. It did push up to 261 and reject. I thought it was going to come low beneath this number, 262, then come back up and reject off 266. That did not happen, but I did think that it would be some kind of a push back up and a rejection and then a drop through. Again, this is not me trying to predict what the fractal is going to do. This is me just saying, like, look, man, if we don't see a change of character, this is what I'm expecting. And it should be going parabolic, basically, because you're getting compressions now that are extremely tight. What's going on is we've got huge amounts of selling volume, historically huge. These aren't just like one-off numbers, right? You can go back and look at the sell-off that occurred in December 2024. We've got some candles here that are definitely standing up to those, and we were way higher at that point, right? So there's a lot of volume in this push down right here. We have spent a lot of time, potentially, right, building up short positions here on these moves. So there's ammunition to take it down for a real strength test. Well, when's it going to stop? All I can do is look at liquidity levels and tell you that's where the strength test would be. This is no different than 2020. It's absolutely the same. No, it's not. Yeah, no, it really is. It's the same setup. The difference is that maybe the model for which we think about these things may not feel the same to us because we don't we don't think about what it is that's going on here versus there, so on and so forth. There are some things about the current time frame that I don't like the major first up thrust is kind of crazy. This is identical. Like, to me, this is the same thing. The fact that this came up ridiculously high on the second push doesn't make any lick of difference to me. It is what it is. It's a secondary push that's pretty high. Most people look at that and say it's aggressively more of a phase B top. This is stronger, so on and so forth. But look at where this spring actually takes place. Okay, this drop beneath that bottom here on the second move down. The first move down, it's nasty sell-off, right? And then it goes up. There's another kind of like a triple motion top here. It's very similar to the way this is bought up, but it's extremely small. It doesn't go back above the previous top here, which would be like our $4. That's already kind of happened, to some degree. It actually does the same thing right here as well, but it's really small. It's really easy to see on this one because there's only like 3 main ones right there. And this one doesn't go down again. Hint, hint, nudge, nudge. That's the key. That's the change, right? But notice where it does find support. It finds support right off of, and I'll change the color on this. It finds support right off of that bottom, which is the phase B bottom. That's like our 246 mark. Okay, so what does that mean? Well, I've said it before that I've considered a lot of different angles on this, and I feel that I need to stop saying I've said it before. It's getting really annoying. But I've considered a lot of different. I'll just say things instead of saying I've said it before, right? Like pompous, like. Um, I have at times. We have gone through this. We talked about this previously. What we talked about was that there are some markers on here that are most curious, right? With these deviations, they're really interesting. And the most curious ones really have to do with where does this end up later, like when it does leave, when it does go down, right? We know this one is extremely tight. Maybe this is where this whole like 226 thing was even derived from, the weird thing that I've been doing, because maybe it just already existed, right? It was just the kind of a standard deviation that was already being used by operators. They knew what it was. That's probably the case, you know? Yeah, I stumbled on it through some weird math, but ultimately, like, doesn't really matter, right? We also can look at other areas and we can consider that, like, this ends up being, again, a liquidity shelf, and going low, this pretty much matches the bottom where we do find support. That's interesting. I don't know if that means that it's going to ultimately play out the same way. I don't. But it's there. And I don't think that these kinds of things have to be perfect. I tend to be very like loosey-goosey with some of this stuff because I'm thinking to myself, well, maybe it does, maybe it doesn't. You know, maybe it really will matter in the end. Maybe it won't. Okay? I know though that ultimately what we could say from a liquidity standpoint, if you're doing the Wyckoff thing, is that this made a phase B bottom. It pushes up of some kind, right? It makes a bottom in the phase B. It pushes up, and then it drops through that bottom in the phase B, and then it finds support on that bottom, right? Which is now becoming phase C, which is your strength test. This is where you have a massive hike in on-balance volume right here. Huge hike in on-balance volume. This is the highest on-balance volume in this entire 2 years or whatever it was. It's right here. And then it goes really, really, really low. Massive sell-off. Bounces out, and then it goes. Okay? That's your markup right here. Buy button removal, etc., etc. And what I've been trying to get across is that these numbers, as we see them in the current time frame, do suggest some pretty serious moves. On the one hand, you know, you're looking backwards and you're thinking like, well, this is crap, man. It's going to go way, way low. Yeah, that would suggest that you could hit 180. Do I think that's necessarily where it's going to be? I don't know. I don't really think that that's a wise thing to like guarantee, first of all. But also, like, there's other markers here, right? Like, there was a mark right here at 246, excuse me, on the top way back here. There's not really a single one-size-fits-all answer, is what I'm trying to say. I look at these things as these are probable markers of deviation, because I think they are. The 246 was already checked, so it would make sense if that's used. But then again, if we're using that same model that we used in 2020, maybe 180 is where it needs to go, because that's the low point. That's been brought up by a lot of people, not just me. Which is it, Booksy? I don't know, and I don't really care, if I'm being honest. I don't. Like, to me, there's no difference. It could have left right now. That's what I was trying to say. Like, it could have left using the 265 or 267 level, and I wouldn't have batted an eye at it. I would have just been like, all right, it's changed character. Let's go. But until that happens, you're kind of just left like, all right, this is going to get nasty, because typically what happens at the end is that the compressions no longer kind of give upside. They just give downside if that's the model, right? And that is the model here for now. So where would the phase B bottom be? It should be at 246. Is it possible it goes beneath 230 something though instead? Yeah. Because again, if it's a spring, it could go as low as it needs to go there. I mean, we're talking about possibly dumping to like 180, so why not? You can go to 233 or something like that. What matters is not how low does it go there, like that you call out the bottom perfectly. 226, that's where it's going to go. That's my big number. not that you call it the bottom perfectly. It's that you recognize, like, if it comes back up and holds support above 246 and then starts taking off above this creek, that's go time. That's where you're no longer considered dumb money, I think. I mean, really, like, that's where you're using what we're talking about here to your advantage. If you're talking about this in terms of like the rights and wrongs, the blacks and whites of the world, you're not going to get anything out of it. If you're looking at it like, all right, I need to see where this liquidity shifts. When does that come back above here? Oh, it made that mark. Oh, it dropped to, let's say it goes to 240. Cool, it almost hit the bottom. Oh, it come back up. Wait, it's building support now over 250. Oh, it's actually back tested 246. Oh, now it's jumping the creek. It's at 260 something. Is this happening? Well, yeah, it's possible. It's ready to go. You could also look at something like this and say, well, it is doing something here, but it's ultimately not holding that level. Well, it came up, it hit once, and then it went up again. That's what I've got on the orange. And then it dropped below the floor again. Why does it keep making lower lows? Oh, and then it came back up. Oh, it's going to go. It's going to go. That could be a bull trap because at this point it's made two lows beneath that 246 floor. It didn't just sit down there, come back up and find support. It's kind of rocketing up and down through it. That's not a good sign. There you go. Maybe it's going to go low. So I know that these charts, they get super messy, and when I'm doing them, I'm talking about a lot of different things. But if you you guys, if you just come on and you look at it for 2 seconds and you say, well, he's just wrong, it didn't happen, then you're missing what I'm doing. Like, this doesn't matter to me. This is purely like, again, describing what I'm thinking about in that moment of like, what would it look like to take off now? What numbers need to be met? I've been doing it almost daily on the Discord group. I don't stream every day because my internet's usually crappy. But I've been doing it almost daily on the Discord group, talking about just little updates. Like, this is the numbers I'm looking at here. This is the numbers I'm looking at here. If this doesn't hold 266, 267, then this is where I think we're going to go. If it does hold 266, 267, and then it comes above up to 280 before the end of the week, then I'm feeling a little bit more confident about a possible run as early as next week. None of that has to be prescriptive, like, at all. You know, it just doesn't. So yeah, I'm kind of burned out on AMC and GME for that reason, that there's a long-term kind of ongoing iterative motion here. It's been going on for like 2 years, and it started in 2024. We're in late 2025. There's really not much else to say that hasn't already been said. If I go back and I look at the markers about what it is that we're looking for, like what it is that, it's always kind of the same thing. It doesn't change. And I know that bothers people because they're like, well, you just said there's some things that are changing right now. Yeah, man. And I can tell you right now that this kind of emotion was bound to happen. When we were going into the end of September, one of the things that I was working on and talking about was like, there's kind of an end of the rope here. You ran out of space. It's going to make a decision. Frankly, October 3rd was a letdown for sure in terms of like which direction we went. It didn't change character afterwards. Bummer. But it also was a big deal. Like, that doesn't mean it wasn't a big deal. It still was a huge deal. Because at the end of the day, like, I knew it wasn't going to just keep going sideways. It was going to make a change. This is a big change. We're now at 254. We haven't been back down here since, like, May. This is a big deal. we've been really consolidating and consolidating up here in the threes. This is an exit of that range. We are out of that area. You know, maybe there's a back test that still happens to like 280 or something. You know, who knows? But like for now, like that's what it looks like. We're dropping down. You know, we're out of that low or that area right here. This was the consolidation that began in February. If you go back and look at this marker, I mean, this is crazy. Like, this has been consolidating really since February and March of 2025 right here. You can see the consolidation beginning right there. That wraparound right here. This is where we've been the whole time. That 4% move that hit like 295 hit that mark, and then we went away from it. So is this a big deal? Like, is this a change? Yeah. And it happened in an area that we knew there was a probable pivot coming. It didn't go the way that we wanted it to, at least not if you're a bull, not immediately. But overall, like, this hasn't changed that much. I would suggest that this is probably the best time to be paying attention to the stock when it's dumping like this, because at the end of the day, like, this sideways stuff is just really misleading, and it was just iteration after iteration after iteration. When it finally picks a direction, things are positioned in a way to kind of make an adjustment and changes. You ask about this as a falling wedge. It could be. Yeah, I'm not going to go into the wedge theory. I think there is a possible wedge here, but I'm not a big fan of that for AMC for some reasons that I don't really want to get crazy into right now. But, you know, I have to imagine if it's not bullish, if we don't get a creek jump soon and it continues to do kind of reset the iterations, yada, 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 how do we see that play out again? Right? Because each one of these, it's like you have a window of opportunity. I don't know if you guys ever played like a video game or something, but you can think about it like a target thing. Or I guess if you're at the, you know, you're at the fair, state fair, and they got like the duck shooting thing or the target shooting thing, the water gun. Every time one of those passes by, you can hit it, but you don't have to. And I look at those motions, like this kind of motion right here back in December, this kind of motion right here in October. I look at that as those windows. But I also look at it as like those windows they're not just rotating out evenly, they're often like compressing, and they are compressing. And nothing's changed there. The fact that this is making a directive challenge to lows is important. We haven't challenged lows except for, I guess, 2 times here. Really looking at these 2 previous buy-ups with the creek cross, one being the big ones, one being April, the other being April. They're both in April. Those are the only 2 times we really challenged that low. So if we do that now and go down and challenge those lows, like, that's a big deal. It's a huge deal. Maybe we lose it, and then it goes on until January. And I've said that frequently as well. I keep saying the same stupid thing here. I'm in defensive mode, I guess. But this is like nothing new is what I'm trying to say under the sun. I'm kind of burned out on AMC and GME because ultimately, if there's no change of character, then you're going to have kind of like more of the same with regards to the mindset of traders for one, but also of, unfortunately, you're going to have more of the same in terms of like, let's just say kicking the can, meaning you're continually reinvesting in the same strategy and you're not ready to mark up. We don't know how low they're going to take it, and ultimately, most springs do some kind of an accumulation low. AMC historically has had pretty, I wouldn't say good, but I'd say they've had pretty low-key springs, like real springs. If you look at the big ones, they're not typically like massively dramatic. They're usually like once it gets to the end, there's very little volume, and then it just goes. With this, I was looking backwards at this this wave. I don't believe this so much as I know that it's already there, and I've been looking at it for a long time. And my cats are fighting. But I've been looking at it for a long time, and I think there's maybe a misconception about what this is as well. This is the more macro outlook from my point of view. I'm not positive how to count this information coming down, and maybe that's a big part of this problem, right? Like, I'm not including this information on the downside here. Maybe this needs to be included. Maybe this is really close. There you go. Maybe this is really the indicator. This looks like the 11th, which does seem to be kind of the middle here. Maybe this is the indicator, because we don't really have, you guys are probably noticing what I'm saying right now, is we don't really have that other side. And a lot of times that other side is fairly equal. You know, in 2020, it does look pretty much the exact same. We don't have that here on AMC. There's a smidge difference in terms of length. I mean, they're not exactly the same length. Usually pretty close, though. We don't have that information here. There's only like a really small, tiny area where this actually hits the low. The rest of this is all during downside. But if you think about it as like a wave, you know, we were just doing it a minute ago. This is all part of like a similar motion here. You can think about it in those regards. I think you're already kind of like getting what I'm throwing out here. If you think about this as like a double top, right, then in theory, and I'll make it a little bit more amicable, like that. And I'll try to match the tops there a little bit better. And I'm going to get rid of those shift ones. The one way to think about it would be, yeah, like horizontally, which I just did the measurement, and apparently it's actually really close horizontally to the beginning and the end here. Okay, that'd be one way to do it. I think that's the right measure. Yeah, it's about right. It's a little bit. I think what I did is I measured to the place where it dropped through. We could measure to where it drops all the way through, give it the extra time. It'd be like there, I guess. No, that's too far. Went the wrong way. Whatever. It's right around there. So one way to look at this would be like how long did it take to return back to here, right? These are probably pretty much equal parts. Another thing would be to look at it as highs and lows, right? You're thinking about like, well, this is really extending down, you know, away from a bottom. I'm purposely drawing it in a weird way, but this is a way to look at it, right? So this is a way of kind of measuring out wave timing. You can see it should be in a downward kind of motion here at the end, but ultimately, like, where do these go, right? I've done it a couple different ways, but I've talked about, at least for a while, or at least since, well, December, we really started looking at this as a probable downward motion as opposed to a sideways motion, that this is the main creek down. We haven't crossed it yet. Recently, I was looking backwards at 2000, really recently. I was looking backward at June and July of 2024. And I found something that I thought was kind of curious, which was that there's a marker on AMC and GME that basically like consolidates. It's sort of the definition of the original creek that we made here. I would suggest that this is probably one of the stronger creeks that I've drawn, at least in relation to like June 2024 through September 2024. That motion is where we really hit a wall and we just didn't pass it. The only time we passed it was when we went up above, but immediately we go back in December, but then immediately it hooks beneath it again. What's curious is that on this next iteration, we're actually traversing across it, and then like it's in the middle, basically. You can see that. We're like in the center mark of it. We are consolidating. I don't know if you can see this. I'm going to tell you why I think this might matter in a second. But you can see here that this consolidation, this is pretty interesting to me because it does appear to me anyways that this is the main mode of consolidation, that as it's shrinking down, it's kind of going back into this this creek, right? And I think you guys would be like, yeah, that seems about right. It looks like that's kind of where it's going. And then it drops from it. And what's interesting is that when it reacts, it kind of abandons it. And I thought it was very curious because the 260 mark, I'd have to go back and redraw it because this isn't quite right. This looks a little off. Like angle-wise, it's a little off. So I'm not going to be able to get it perfect. But the one thing that I thought was really curious was that this mark kind of meets up with like that 265 zone. And then I was looking at the next one, and I was like, you know, it really kind of did the same thing again. If you look at where that creek jump is, there's another consolidation. It depends on, I guess, which one you use. But I've got one that I thought was probably accurate was this guy. Because, again, these go into those parallels very readily, right? And there's like continued consolidation. In this case, I don't think it shifted dramatically, if it did at all. Maybe it's still part of the same thing. But it doesn't look like it shifted dramatically. It started looking a little more downward perhaps here, I suppose. I could say it looked a little bit more downward. Anyways, one thing that I found very curious was this was actually sitting above that mark. And I was like, you know, when you look at the big picture, like the big macro picture, so to speak, this does kind of have the vibe of a larger play here, right? That's also consolidating along this marker. But now it's like on top of it, which I thought was pretty interesting. Again, maybe it goes through it again and it ends up messing around. But I wouldn't be surprised, and I'm just saying it serious, being kind of serious about this. I would not be surprised if, because I've seen this before in ranges, and I would not be surprised if this ends up being kind of the marker that we take off from in the end. It wouldn't surprise me at all. I'm not drawing it perfectly here, but it would not surprise me if that consolidation, we end up pushing away from that in the last minute. I had to kind of check this idea on GME because I thought, well, so far the iterations have been pretty consistent between the two. Like when one is iterating more downward and the other is more sideways, they're both there. Anyways, I made the markers. I looked back at GME and I thought, well, maybe it's there as well. And it is. It's really interesting. On the second 4-hour candle on that same day, using the first one, it just doesn't work. It's like really, really high. But there's a little rejection candle that happens between these two, and then it comes back up and it's using this region right here as supply. So I'm using my eyes and just kind of saying, where is the supply here? Is it way up top? Well, I mean, there was supply there. They obviously dumped it. Somebody sold it there. But really, like, the wall is being built right here, right, above this level at around 30. That second marker and this marker right here, I punched it just to see where it goes. So you can tell those are actually anchored on that. This is very much so, in my opinion, probable. Now, there's some weird things going on here, which is that recently it's been kind of moving away from it quite a bit, more to the upside, and it doesn't seem to have like a center mark built in. But then I also kind of note that, well, maybe the reason for that is because it's not really the center. I know it sounds stupid because you're like, well, you just said it was a center. But like this is really a top, and it just defines direction. And in reality, we already know, like, that's not the middle because you can see it visually. Like, it's not the middle of this. If I were to take, like, a drag through here, and I could go either to the lowest low or this low. It doesn't make any difference. you would see that that's not in the center. But then I'm like thinking to myself, does it really matter? If this is what is established as a sell zone, then pretty much everything above that would be sold off. And that's what we see, is that there's a kind of a weakness built into whatever it comes above. But it is curious as a 50-50, because I'm like, if it 50-50'd around it right now, and that bottom was hit like perfectly, if it 50-50's around it right now, where would it go? And it goes to like 1793. And I'm like, well, that's really interesting, because you're creating like a system of dropping. Now, this already had some weaknesses, so it's possible it could just bleed through. There's some other things here at GME that make me nervous about dropping down to like 17 or something. This is what it looks like. This is what these levels are that need to be hit in order to exit. We're not there yet. It starts with a higher high of like 24, right? We're not there yet. This is what it looks like to advance. But this is ultimately like got to make some serious change of character, because right now it's not even like a question mark in my head. I can see the higher push here, but what would need to happen is it makes the higher low, and then it could advance. And it can't go beneath the creek. And I'm pretty sure it already dumped this one. It looks like it did today. And I'm like, all right, well, that's that. It's gone. Is there something else it could be going for? Not really. Maybe this one. This is really low. But that ultimately leads you to a lower low. So it kind of nullifies itself. So I look at this, and that's why I was saying, like yesterday, I could see it going today if it just held and went. It didn't happen. And if it goes down, it's very possible it just kind of is bearish, as in it's going to go lower. There's plenty of evidence that suggests that, again, if this is like a phase B bottom, so to speak, where would it be? You have auto reaction, a bottom here. There's support at 29.95. You have a higher high right at 28. But all of this is happening within range, so it's really not taking into consideration like the bigger picture. There's tons of other macro setup bottoms here that we could look at and be like, yeah, well, that's a reaction and blah, blah, blah. And we'd have to look at these other bottoms as potential targets. One is like 2050. I think that's a pretty high mark target. That would probably matter. But, it starts right here in the local time frame. And I thought it was really curious that is, so I'm just looking at the previous bottom we just made. Now that's basically like, all right, well, it's kind of interesting to me, because we spent a lot of time consolidating underneath this. Like, it was used as an anchor here in August when that compression was going on. And then there's this push out. I've talked about how I thought this was iterative. It goes through the same motions as this section right here. And I think it is. But then I was considering like, well, what else has this been used for? Because it can't just be that. And it is in this region right here where you have, I'm coming to a point on this. There's a reason I'm mentioning it. This guy right here, this is the middle. And I perceived this as the middle for a while. I've had questions in my brain about whether this could be the middle, this crazy volatility here, that there's another kind of center mark that I'm not quite seeing. It looks like almost the same thing that we see here, but it's like bigger. So I'm like, I wonder if this is like a massive version of some other middle. I'm just not perceiving it. It's possible. It's possible, because it really does look very, very similar to what we see here, but on a much bigger scale. But regardless, I think this is the middle, and I'm looking back, and I had just done some analysis on from the bottom here up through the center, where would it go? And it's like 45 kind of stuff going upward. I looked at this as a wedge and measured it out just to see what it was. And if it's a wedge from top to bottom here and it breaks out, there's two breakouts. One would be at 26. That's if it's not including this up thrust. If you use the top two tops, then the breakout should be at 32, which is interesting because that's where the warrants are. We wouldn't have to guess that much because ultimately it doesn't really matter what line you draw here. Like they're all kind of in the same spot. One of them's at like 28, the other's at like 32. So it doesn't make any difference in my mind. I'm like, you need both really regardless, you need both. What was curious was that the Bolkowski measure is 45.5 and 54. I find that to be very curious because it's I made a little box here. It's essentially straddling the high creek. So what that means to me is that from a technical standpoint, cause and effect, that the cause being built here has potential for trajectory. Well, I would say a potential for enough push to get to a certain point. I don't think that's confusing, but statistically speaking, Bolkowski uses statistical targets, and it's like it's like 58% or 59%, which is better than a coin toss, but it's close to the 618, I guess, if you want to call it that. But anyways, that's interesting to me. So I'm like, all right, so basically we're creating enough of a movement here, of a consolidation. It's big enough that it would naturally get you on average, above average, to this price. That's really similar to the other marks that I'd already made on the chart previous to this. And I was like, yeah, it's just another kind of thing, right? It's kind of burning out on the same points. You're losing, you're just losing time because you're just doing the same things over and over, but you're ultimately getting like the same answer, which is kind of nice. Now, I haven't been able to find very many answers that get us back up to like 90. There's a couple spots there that make me curious. One, 45. 45 is half of 90, and it may not matter that much, but it's also using certain, let's just say parallels here, because that's what they are, these uptrends. Some of them, where they intersect kind of these downward trends, ends up being kind of like a halfway point from where we are, from the lows here at like 21 up to about 90, which is curious. I don't make a lot of that. I don't think it matters that much. It would be dishonest, though, to say that it doesn't matter at all when things are mathematically kind of perfect. If you go back and you look at this move right here, and you look at where the consolidation was previous, it's hard. I mean, I don't know how anyone could look at this with any honesty or, and say that that didn't matter. Like, it clearly is like a 50-50 around this mark. So the question is, do the operators deliberately move X number away from that mark in order to get up to the top, X height above that mark? I don't know. We also know that this was truncated because it actually goes much higher, and then in extended hours, it opens low. It never revisited the top. So there's other question marks in my brain, right? If this is where we are now, this middle is pretty darn low, right? It doesn't really make a lot of sense. You wouldn't even think you'd go very high, right? Unless you go down to like 18 or something. You go low, then maybe you go higher. Regardless, even if it makes that drop, it brings you back up to these levels here from about 38 to about 45. And I can't find another target. Like, it just doesn't, nothing else shows up. Like, the lowest I can get is like 38. The highest I can get is like this 54 level, and I've done it a few different times. I've never gotten perfectly, unless you count this line right here that's cutting up, I've never gotten perfectly to 65 or 90. And those are levels that I think a lot of people will be looking at as previous tops. I'm not saying it couldn't happen, but it hasn't yet become like, hey, this is happening kind of thing. All right, so the reason I'm bringing this up, this line coming down, what I looked at specifically, I thought I should probably check this out. I was like, where does it cross down, right? Where does it cross down through it after this January time period, December time period? Where does it really drop through it? This struck me as kind of odd. There's two spots here on GME that I thought were really important, and it's not one of those spots. One is not February 24th, okay? That was not the one I had picked out. I'd picked the 14th. The reason for that It's actually pretty simple because when it came down, that's where I thought it jumped over the creek to the upside this direction. So I was like, oh, it goes up on the 14th. And then previously, when I had done uptrends here, that's where it seemed like the intersection was. Also, historically speaking, just in general, if you go back and you look at previous jumps, there's almost always like a push up right here. And that usually represents kind of a middle of the function. It depends on where you measure from, yeah, but it often represents like a middle of the function. You can see a similar motion here, and if you go back to where it kind of dropped in and where it takes off, you can see this kind of early motion back up. This ends up being like dead center. So this kind of dead zone in the middle where nothing's happening between the ears actually ends up being like kind of predictive to some degree of where you have kind of beginning and end of this bigger picture. Is that always the case? It's pretty consistent. It's not 100%. Sometimes it's slightly off, but it's never like way off. I was like, oh, that's pretty surprising. It's very consistently similar. It's also the idea of this, again, being that like this is where that jump happens. I'm thinking, well, you know, maybe in some ways, wherever that jump happens, that's like a marker, or I could use other markers. This is where the first creek crosses right here. How do you find that, right? What is that? So I had been using February 14th for a little while now, and I thought that's probably still pretty accurate, but there's another one right here, which is, there's two really, and that would be where did it first cross down? That is closer to January 31st and February 1st, well, really February 3rd, right here. Then it comes back above and it drops through again, and then it doesn't ever come back. So if you're looking at the interaction, only the interaction with this new line that apparently was a supply line that was built in June and July, this is the only interaction that we have, right? 1, 2, and then 3, the 2 being kind of these middle interactions. Somewhere between here and here would probably be a middle. I'd previously used the 14th, not because it's Valentine's Day, but again, because I thought the upward motion had a back test there. And I have been using this kind of area, specifically going back to, and I don't know if I did it right, going back to here. I think this defines a lot of the motion going up towards the top, meaning like this is a directional movement. You're kind of walking down. This was an uptrend support very, very, very briefly. Right, and it does point back to some earlier supports from like the original bottom. I think specifically it goes above these two tops here. So this is not like a random line that doesn't mean anything. You can see like the walk down right there, very deliberate walk down through it, and then the break above it ends up signaling really the market. So I mean, like that's the same exact spot this kind of takes off and then goes to the second creek breakout. And that's the line that we're trying to hold here, and we don't. So again, I had been using these markers as kind of middle markers, and I've been considering this as like, well, there are not that many spots that this could really have a middle. Previously, though, to this, I'd only ever drawn out February as February 14th as the latest, right? Now, I'd used two different methods for measuring that. One was from this top. Well, I guess 3, but I don't want to count. The middle one doesn't make a lot of sense to me. This one made the most sense to me, which was to use the peak here. Now, I haven't used, I'm like 1 bar off, right? Since I'm not using that first peak on June 7th. This made the most sense to me for a time. I actually had used this one as well because I thought it was like the hook value. This guy right here on June 7th, and any of these middle markers. Now, you guys are like, well, obviously that didn't work. But curiously, you do get a lot of the right answers. Like you still get really key pivotal zones. Like one of the pivot zones here was like August 28th. And when we used August 28th, I mean, is that a place where you see a directional change in the stock? Pretty much. There's a kind of a cluster in this region. It could just be coincidence, I guess. But then like later on, I'm using the 14th and I'm saying to people in the Discord and stuff that like really that to me was like one of the later dates, and I'd said I think October 22nd Weirdly, October 22nd, it hits like a low and it bounces. So you start thinking, well, maybe this is the one, right? And you realize, like, well, how long is this going to go on for? The thing is that everything outside of these two areas, you could use any of those cross-ups. But one thing that is quite interesting to me always is like looking at the measurements away from markers and towards markers. I always think about like, if this is entering into an S curve, you usually have two legs. One's going to come above, one's going to come below. In this case, the only below marker we have is like this guy, which is kind of strange. And that's really way off. As if this went really low and then just came back to retest it. And it doesn't even do a good job. It just kind of sits in this like squishy middle and then dumps again going into April. I thought that was kind of curious. I was like, well, that may matter at some point in the future. But it does create this kind of bracketed area that's really like a region. It's not just one particular spot or another. And I'd been using pretty much one spot the whole time. All right. So what does that all mean? I've been using this as an anchor. I still think this is a probable anchor, right, for the overall motion here. But if I'm being honest, I think there's also a good chance, right, that this is just representative of a middle. And that's the reason why we're seeing it as a pivot, both horizontally, downwardly, and, upwardly. In both cases, there's kind of a rising trend, a falling trend, and a sideways trend. That marker matches that 27 area that we talked about previously. So that it's almost like, in some ways it's like a nothing burger, but in other ways it's probably the most important piece to the whole thing. So then what I did is I looked at the bottom, and this is where I was getting to. I looked at the bottom and I went to, so I'm like, all right, well, there it is. There's a middle here somewhere, and it's in this region right there. I went to the bottom. I said, let me try the new date. Let me try February 24th instead of the 14th. And let's just see where it goes. And I found a couple curiosities. So like one was that if you do and this wasn't meant to be off, but I think I changed this guy to hit the low. So these are clearly not parallel anymore. The blue lines going up are parallel. That's the way it was intended. And I did a measurement across the middle here. So what I did is I looked at, and I can't remember exactly how I drew it. I looked at this measurement right here, like that. And I was like, that's curious because there's a peak there and there's a peak there. And I'm like, it's really symmetrical, weird. And they actually go back to a really similar region. Like they're both going back to like this 26 area at that time. Again, that's an equal part 1, 2, 3, 4. They're equally separating over time, maybe quarterly, who knows. I think it's more than 4 quarters, but there's kind of a return back to this baseline middle frequently, right? And now we're kind of hovering around this other baseline middle, but it's more downward. I know this is all a bunch of weird theory, but I'm getting to the point here. I did the measurement and I thought it was really curious because this does match the two peaks right after the fact. Now I don't think you needed to find all that other stuff to kind of see that visually, but then it made me really curious about what else, that brings about. And so I did the parallels and I looked at where does that intersect the top. This is the only time that I've found any kind of evidence, if you want to say there is evidence. If you go to like the peak here, this is like the only place I can really see evidence of like a wave structure that might go back to 65. This is it. Like I said it earlier, I've never found that before. I really didn't think it was the most likely. 45 to 50 something seemed the most likely. Before you dismiss this and you say, that's dumb, that's a bad way to do TA, remember sine wave theory, and it's important. So if you don't know it, you need to see it. This is just math. This isn't trickery or anything like that. It's not Booksy exclusive, right? But I need to make sure you understand where this is coming from. So in sine waves, this isn't 100% true in the market. It's just often true, okay? Couple things. First, this bottom, right, when you split the two, top to bottom here, when you go from peak to valley, and you split it, if you draw from the previous valley, it gives you the next peak. That's just angles, mathematical angles, okay? The same thing can be said for the downside, just mathematical angles. If you can find the peak and valley and you can split the difference, then often it is where it's going to go. Have I used this to trade in other charts outside of AMC and GME? Yes. Have I used this to trade on AMC and GME, and has it worked? Yes, it has. It doesn't always work, okay, 100% of the time, but it works. One example of a really simple one that I did here on AMC and GME was this guy, where all you had to do was take a cross section, look at the bottom of the wave, and draw a cross. And then if you know where the parallels are, which I've got them on the chart actually, this one and this one, then you have a rough estimation of where this is going to hit a top. I did this way in advance. I had an S-curve on the chart. It went up pretty high to like 30 something, and that was it, okay? That 100% comes from just wave theory. Now, it didn't have to do that. It didn't have to go up. It's not like it must do it. There are times where obviously it breaks down. And what we see is that this correlates pretty heavily to what we see in what I call the cat ears, which are these double top motions, double bottom motions. It also often correlates to fib retracements. So you might get a sell down here, get like a perceived bottom, but then you stop short. And if it then reverses, you're now on a different wavelength, right? And you have to then shift your momentum, because sometimes it just doesn't have the ammunition to get there. So it's not, again, this is not a guarantee that it's always going to work out. But in a regular trend, and we do exist where regular trends happen, there tends to be a pretty consistent yes to this answer. I thought this was kind of interesting because it does look like partially like that here when it comes down. I was like, yeah, it could be, maybe a downward motion. But then I also thought it was interesting because if you look at this as a big wave up and down, there would be an implication here that if this is truly like a multi-stage wave, even if it's an ABC correction and it doesn't end up being bullish long term, this would just be an A. There's been no B. There's no second higher high, nothing like that. How would that happen? Well, you'd have to establish maybe what I would call like a pitchfork or a new set of rules. This is pretty typical when we see like a build out across a range like this, but usually it's not so flat. So normally there would be like a more obvious, I guess I would say trend building, parallel building. These are pretty clear places to use though. You've got support here. Then you also have resistance on these two tops, and you've got supports back here. If I'm going to build a trend, I'm probably going to do that. Not only that, but you have kind of macro long-term potential trends that you could use as well. All right, what does that tell you? It tells me a couple things, but one is that if I look at this as a rejection here that happened deliberately on July 18th, it's possible that that rejection happened deliberately, and as a result of that, that's actually like a wave top. The rest of this is like extra, and I know you might think that's a little silly, but hear me out, because the rest of this is very regular, and I think this part goes back to like my theories about targets and like where do I think they were trying to go, and that has more to do with AMC than GME perhaps, but I've said it before, I think that these are the main targets. These are kind of like extensions, and this is really the range, and I think it's evident by the way we trade later. Like we're not going way back up to the tippy top on a buying climax. We're going to where either the distribution's happening or the reaccumulation's happening. That's these 2 points right here. So if I think about it from that point of view, this theoretically could be very much so. Could be just a really simple ABC kind of correction of sorts. And if I think that this is, then I would have to look at this as a matter of not opinion, but of just simple wave schematic, right? So I did that and I looked through and I was like, yeah, it pretty much matches that same region. So the expectation, maybe I'm a little off with my parallels, that would matter. So for example, if they're a little bit less wide they're more like this, less steep, that would make a significant difference, obviously. And then I'd also have to, if I'm doing that, count this as part of it. So there's different ways to do this. You guys can do it on your own time if you want to. You can check it out and try it out. That could be right. That's right there. So if that's the case, it's not done yet. Maybe it stops over here somewhere. Really doesn't matter. And the thing is like, and when I say it doesn't matter, I mean like it almost doesn't matter how low this goes, because if this is like an extension up, you could have an extension down as long as it recaptures the main trend. What would change is, of course, the trajectory out here. That, to me, seems like a realistic way to shift time in your favor. This puts it in February 2026. So I hadn't really been surprised by a lot of stuff I found, because it does the same thing that we were kind of expecting. And why I hadn't really talked about GME that much, because there's not really much to say. If GME goes right now, it has to obviously have a succinct bottom here. It's still intra-range. It's going to need to make a lot of higher highs, but really the same markers, the 28 and the 30-something, unless it takes a really long time, those are probably going to be universally true no matter what happens down bottom. The lows of 18 to 17, they've been on the table for a long, long, long time. People were talking about that back here when it first came down. And then again over here. It's just like that 180, right? It's like, it's this fabled number. Are we going to get there? Are we going to get there? I don't know. It almost makes no difference, but I would say that on the whole, if this ends up being like a wave schematic, this would make a lot of sense to me as a center mark going out into February. And when I started looking at that, I went back to AMC and I was checking out like a similar time frame. And it's kind of curious because AMC doesn't have, I don't know how to describe this, but it doesn't seem to have like the same time frame, if that makes sense. It's almost like the middle here, this is where you have the most extreme sell down, and it's right there in January on the 13th. Very different from GME. That is where GME kind of peaked, and then it starts dropping down, but that's really steep. So one of them's wrong if you think it's January 13th. There's either AMC's right and this is right, and then if they're the exact same, right? And then GME's really gonna go way, way higher. Or it is lower, in which case AMC would be lower. But I was looking at the markups and I'm like, it's the same kind of idea here. You do have a lot of cross up that's going on. There is a wave cross right here, much like you see on GME, but then there's no, like I was saying earlier, there's not really any other cross down. And that is, of course, unless you look at the overall picture here, in which case you've got this concept of this like midline. Now, I did it a couple different times in a couple different ways, and I found that AMC is the lesser consistency of the two. It doesn't, this midline that goes through the June and July tops, mostly because there's like 6 July tops. There's so many. This is the one I like the most because it seems to interact the most with this creek, these two shoulders right here, and then ultimately where we are now. If that's the case, we could have landed on top of it the other day, and we didn't. It would have stopped at like 262 or 3 or something like that, and we didn't. We went below it, so now we're below that line again. Maybe we come back above at some point in the future. However, it doesn't act as a really good middle. So when I went through and I did this, I'm using a little bit of vague language here because I haven't really come to the concrete conclusion that I want to come to on this yet. But I will say that on the whole, this motion right here, what it tells me is that like this February region, there's a possibility, I don't think it's an inevitability, but there's a possibility I'm either measuring it too high and it's really intended to be like here, which I know you guys are like, well, that sucks. Yeah, it does suck. But the thing is like when I go back and I look at that, that's like 430. I found that to be kind of curious as well because that's the previous top from over here. And I started wondering what if we got to like, I know it's a big what if. This is pure speculation, okay? But what if we got to that day where they're going to announce the split, right? And we're pumping up or something from earnings and we go up into December 10th and we're only at like 430. What would you do? I think I would be pretty confident that it'd be done because there's a semblance of unity here in using the same markers as if those are established. And this concept of like delaying time, while it may be reasonable, it would also, you'd have to kind of conclude that something similar may have happened here on AMC. Now, why am I not like 1,000% sold on that? Because top to bottom here, and I've already kind of addressed this, the middle is like 370, which I think isn't a very agreeable middle of this range. I don't think that it's wrong if you use 556 and 246. It's pretty darn close to the right answer. But I also was like looking back and like if you go from the absolute bottom through that marker, it does get you obviously back to the top as it normally would. That wave schematic down though, and this is kind of curious, and this is kind of why I was bringing it up. I have done this different ways as well, and I never measured from the 28th. I've always measured from kind of the peak here back near May 13th, not from June 7th. So there's something wrong with that because I just did it here and I measured as if July 13th could have been the middle. Now I'm giving myself a little bit of grace because there's obviously leeway on outside of this current trend that I have set up, and I'm like kind of thinking that in my head, like I'm not really drawing it necessarily to the T. But I do think it's curious because if you include the rest of this and you go back to these regions right here, you can see that particular mark on the 9th and the second up thrust even on the 23rd, they're all kind of skirting around these same levels. So it's curious to me because there is a consistency in that whatever was being done in June and July here in terms of establishing a resistance, a supply zone, was being done in the same manner that it was here. And then you're also seemingly respecting any kind of a possible uptrend at that point as well. So these markers, which I mean, you kind of already knew this to some degree, so I'm not trying to say you don't know this already. You probably do. But I think that to me would be like the topmost portion of this wave. So here's why this is important, because if you then measure out from this region down, it is indeed like over. And if it's not over, it's basically done, like very, very soon. So I went to the widest spot here when it first intersects that top trend. I didn't even go to these markers. I guess you could and maybe use the 24th. That would shift it over, or the 28th. I'm not doing that. I'm just doing... because what I did here was like just top to bottom. I just went from when did it hit the peak, when did it hit the valley, where's the middle? It's actually February 6th. It's not really it's not intersecting anything. It's just floating around in space here, you know. But I looked at that and I thought, well, if that's the top of the wave formation as it's building up, you measure down, where would it go to? And you can see it on the chart. It actually goes to like this weekend. Now, I could fiddle around with it here and there, but I'm pretty sure I got it right. This is most curious to me because, as you can tell, look at what happened. It was like, what? Booksy, this is bad. It's going the wrong way. I know, but look at what happened right here. I'm not sure 100% what that means. All right? You guys are like, well, nothing. It means nothing, Booksy. Nothing you say means anything. It's all made up, and the points don't matter. If you use that 13th date, again, and you use the center of this downward shift, which I still think, if we're looking at the two, would be similar in terms of where that middle is, unless I'm just way, way off and it's some weird macro version thing. It's probably going to end up being what happens later with my luck. That should be the middle around February, and it's really similar. So you're still in that February time period. This would be like the termination point of the big wave. I think it's pretty interesting then. If you look at where that is, I think it's really interesting that is was supposed to be like the 28th, right? The last kind of green candle you have here, and then it's starting to go down. When I did the rest of the measurement, and this is the part that might both excite you and frighten you. I'm here to excite you and frighten you. No. This is the part that I think is probably the most... I find it to be very interesting. Maybe you guys don't care, but notice what happened here. If you were to go in reverse, this is a sweep, right? This is a sweep. It's a liquidity sweep. It's going really, really high to basically blot out some of these fair value gaps and other things like that, okay? There's more to it, but that's a big part of what this is. That's a liquidity sweep. Now, it's a really high liquidity sweep. Super, super high. Probably too high, right? We don't like how that might be implemented in the current time frame, but that's where it is. Now, I'm not suggesting it's going to go down necessarily that low, but I do find it to be really curious because if it's sweeping high here and then equal parts across the middle, it's starting to attempt to sweep low. I think that's a really good sign. I do not think, again, that this is necessarily indicative at all of how low this goes. If this were to go the ultimate direction, it's probably going to go to 1. I think I've talked about this before. I think if you go to like the extended hours at like 13 or something and you measure like halfway down, it goes to like $1 almost perfectly. You guys are like, it's going to hit 1. I don't think it's going to hit 1, but and the reason for that, I believe the reason for that is quite simple, which is that when you look at historically how these have moved, yeah, like up thrust and then down thrust, or up thrust and then springs can be pretty similar. Sweeping up across the top of range versus the bottom of range can be really similar. If you look at this rotation as, again, as a rotation, you can see the similarity. It's kind of odd, right? You can see like how we backed up to this 4 area. We backed up to this 4 area. Again, using what we do have here, you can see there's a lot of similarity in terms of timing. When we're looking forwardly, we're kind of thinking about consolidation here. Here, it was almost in reverse, right? It's like widening. This is like narrowing. But it is interesting that this is where the liquidity sweep happens, and then it pumps, in theory, as a wave would go. If it inverts, then it goes all the way back down, right? So I was considering like how, from a macro standpoint, that rotation actually plays really neatly into this idea of a spring right now. And it really hasn't changed. If I look at GME, it hasn't changed that much or affected that much of how we move. But you guys are like, what? What is it? Then herein lies the dilemma. And I think I have the answer, but I'm not like sold on my own concept yet. So GME is really different because it's sideways. What makes GME easy in that regard is we were just talking about it. We were just talking about how like, hey man, what if this went low and then it wrapped around and went high? Like where would it maybe go? Maybe it goes to 41 if it drops to 17. Why are we saying that? Why was Booksy saying that? Maybe you weren't saying it. Why was 27 like being used as a middle? Well, it was being used as a middle because this is the middle right here. And it was previously used, again, as evidenced by the previous motion, as a sort of 50-50 marker. And it was. I mean, you go to extended hours or whatever where it hit the top, like 79 or whatever it was. And you can see it was like really perfect, okay? So in theory, the way I was thinking about it was it doesn't have to do that. I mean, a spring could go wherever it needs to go to. We see that on AMC too. There is a sense of continuity there with the spring, but like, who knows? Maybe we're off, and it's really more about the horizontal, right? Maybe it's more about this direct, not about the horizontal, but about this. Maybe it's more about that, and that's the middle. Well, that gives you the same answer, right? Because it gives you the same answer as like we're going to go back up to the top. It's the same answer as this wave. All of that makes sense to me on GME. So it doesn't matter if you pick this and you're like, oh, it's going to slingshot over that. The breakouts are the same either way. All of that's good. Why does that not work on AMC? Well, on the one hand, you could say, well, maybe it does, because if you just go from like whatever low here through the middle, isn't the middle like 370? Is it? That's the question, right? Because the middle's not really 370 if we think it's the same as GME. It also does not appear that this particular line represents anything. There's really no interaction with it at all for a long time. So outside of like a couple different little small interactions, if we thought this was the middle right here, and that 3 something was the middle, in order for us to get up to like 6 something, which seemed reasonable to me, you'd have to drop really, really low, you know? And I don't want to go into like, this is kind of confusing, but what I'm trying to say is because this is downward, it makes me wonder where the actual line is supposed to be, like for the middle. This one at first seemed right to me, and later I was thinking about how like, yeah, it looks right because on GME it looks right. But then I was thinking about how like AMC has this bizarro sell down that's really long-winded. And previously, I think we had done this a couple times because we had looked back at this marker here. This is like a 50-50 in the beginning. I know I'm going long here, but this is like a 50-50 in the beginning. And this interaction down, I find it to be really curious. It has already tested multiple times that line. It's not like that has gone untested. It's been checked a lot right here. I don't necessarily think it has to go back to this marker. But we had talked about this before as well. When I thought about this dropping down to 17, it reminded me that back in September and October, that was the level that we were at. Against horizontal, it's weird. It goes down. And there's not really any way to do that here because this is low, or this is higher up. We're below where we were in October. Granted, we're thinking that if it ends up traveling up to this top at like 630 something or whatever it is, okay, it would eventually maybe come back there. But curiously, again, triangulating these kind of markers and looking at where they are, we've kind of passed the window. Like, it doesn't really add up. I guess what I'm trying to say is that like these markers don't make a lot of sense to me. Unless you're looking, this is kind of creepy. Unless you're looking, sorry, what I just did. Unless you're looking like way out here in like mid next year, which is really far away. And I'm like, well, I mean, I guess it's possible, right? But at the end of the day, I just want to know if this is the top, right? This is a bottom wave. This is the top. Where would it go? And in previous years, I suppose, and in times, I probably would have just done this and said, well, it does take off here, it jumps the creek, and then it takes off. But you know that it doesn't because we already know that it went sideways for a long time, and it really doesn't take off until like 292. If I use that one, you can see it goes pretty low here. That's really low. And then in addition to that, I would even go back a step further and say, well, this starts leading back to your 180 mark really quick. So the reason I'm bringing this up is because this pivot in the middle, I find it to be probably the most important thing. And I've been drawing this chart for a little while now. According to this middle, and I think it's the right middle, but I also think that if you shift it a little bit, it changes things very dramatically. Let me show you what I'm talking about. And now that I've shifted the timing to where I think, that middle might be more truly where it is, it still doesn't quite match up with GME, which has the middle, again, farther over, right? More or less right at the beginning of March, which is way too long for AMC. If you're using the middle that we currently have, that's not right. The middle that we currently have suggests that it's over and it should be going into an opposite sweep. This is sweeping up. This should be sweeping down. And it is. That's what's kind of freaky about it, purely based on this measurement alone. But then the implication is it really doesn't go very far, if at all, much at all, above this top. It really would only go in a reverse sweep just slightly above 556. And not by much. It would only go up to like maybe this marker that we made at like 574, assuming that that wasn't already checked. That's too low. And again, those numbers, they don't really add up when you're using like double motions. You'd have to drop down to like something like this. You see what I'm saying? And this is like that 180 mark. So there is a continuity here in that you could have a big drop here to like 180. If it 50-50s around 320, it goes up to 568. This, though, does change the chart because, in my opinion, if it drops that low and then comes back up again, now you've got this massive swath. I'm going to attribute it to the probability here to what we're maybe in for in the future, unfortunately. But now you've got this kind of like massive downward motion, I think, that's implemented here, inclined. I can't say for sure what's going to happen if it hits that mark. That's way lower than I would have imagined it going ever. That's super low. But if it does do this and drops and then comes back up again and we end up diluting by 500 million shares, 556, cut in half is your 225 mark, your 226 mark. So in theory, it's not unrealistic to say if somehow this managed to get up here by the 10th of December, and I'm going to talk about this number in a second, because this actually is not December. This is actually November 26th. That's where that flip around would be. If this does get up there by that point, and then there's an announcement of no rate cut or whatever, and then we're going to cut it in half, we're going to do this. I don't think it's unrealistic to say this could be like distributive action, and you're going to then see it drop all the way back down to like 2s. The reason that's dramatically different, I suppose, than what we'd previously looked at was that if they shift the value lower and we don't get that push out here, it's kind of abandoning like everything else that's come before it. We lose that momentum because previously we had looked at this as if this mark right here was eventually going to hit. And that would have led you back to 19 something. I don't think there's any doubt in my mind we would have hit that 1960 at some point. Even now, like just staring at it, you're like, it looks kind of symmetrical because I think it is. If you look at the downward motion here, just do like a really basic 65-degree angle to the upside right here. And look at where it revisits that mark. Like I can't say like with any certainty that that's correct, like that this is the right mark, except for when I look back at 2020, it is the right mark. So I'm like, well, it either is or it isn't, right? It's pretty black and white. If it is the right mark and that's the exit out trajectory on this big wave, and I had originally talked about February 2026, I was mouthing off about it early in the stream today, just being me, mouthing off. This is way after that. This is like June 2026. It's not January 2026, right? But the concept of that wave taking this huge amount of time to get up there, you'd have probably some kind of a markup in the middle. Because again, this is an idea of like a trajectory in, trajectory out. So if you're looking at that as a big kind of a macro wave here to the middle, which I don't think it is, we'd be way behind. We would have probably have rejected off of it here at 4. That's what that would look like to me. Or maybe even right here. It almost looks correct. A lot of these things I know look correct, but it almost looks really right when you look at it like a bowl shape here, as if it was trying to define something. It doesn't define it. And then this is still like a bowl shape. There's like a middle here that's not being used. This would have made more sense to me if we were going to see that markup. This is completely the opposite, right? It's going the wrong way. This would have made more sense to me to see that markup to $7 and then check sideways. And then at some point in the future, maybe going into, again, February or whatnot, see that pump up higher. I wouldn't have second guessed it that much. And then have a distributive action here going into June or July. That to me would have felt right. So I had been drawing the chart like that for a while because, again, we're way behind the curve here when it comes to where would that be. So that melt up is just going to be astronomically high, right? I don't think so. But I also think, it just doesn't feel realistic to me, so I don't like to think about that. But I also think about how, it never hit that 15 mark. Why would we just leave that? Maybe we would. If the goal here is to have a dilution of that magnitude, it's hard to know how the market responds to that, except for maybe what happened to, who knows, maybe what happened to Beyond, Bed Bath & Beyond, right? But if it were to only go here, right, we had this big sell down and pop back up. I find this to be unsettling, I guess is what I'm trying to say. And when I'm looking backwards at where those low markers are, I'm curious as to why they are where they are. And then on the macro standpoint, what does that imply in the future? I don't like this as much as any other person. I look at it and I'm like, ugh. But it would make sense to me that 2.5, something like that, 250, if we're really intending on just kind of selling off, if this operator has a change of character, they're not going to just take it down and leave it low. They would take it below and then take it back up. Or they would just take it up right now and then drop it. And I'm really nervous that might be the case. Especially if they don't take it down. And it sounds kind of weird. But if they don't take it down and it just pumps up from here, I'd be very skeptical if I don't see it consolidate above 550. Because I'm wondering in the back of my head what has changed. Something must have changed, right? Because you can't just announce that you're going to put 500 million shares and the operator just already knew that. I don't know. Maybe they would have expected something like it. But to me, that's a huge deal. 500 million shares is a big, big deal. If I've already accumulated long in this region, I'm going to have to get rid of those shares somehow. Most of the time, if you're just going to pump it back to the top to take it over. I don't necessarily think it has to stop right there, by the way. I think it could be like a kind of a consolidation. But what I'm saying is that if you do that into the 10th and what have you, and there is a motion, then by the 10th you dump it. I think that would make sense, So if it consolidates underneath, it looks like an SOS, but I'd be really concerned the way I drew it. I'd be really concerned of it knocking down. So all of this is coming from a couple places, not just fear. It's really coming from this marker here and this idea of where that middle is and then why that would matter on AMC if it drops low. In terms of the overall picture, I'm still bullish on this move. But I don't feel that it's inevitable that we go higher. I guess what I'm trying to say. It makes me really nervous about it. And I'm also kind of worried that this setup, and I'm not trying to be a naysayer here, but that this setup somehow is driving us into a corner. One thing I wouldn't want to see here is that there's a sudden burst, right, in November or whatever. There's a sudden burst up, and then it drops way back beneath like 4. That would remind us a lot of what happened here, but I think from an iteration standpoint, that'd be really ugly. Because typically what you want to see is that this parallel structure is supported on the way up, not rejected. And any kind of a walk down underneath these levels, specifically right here at 430 to 4, I think would be really, really bad. I think it would probably be an early indication of, as early as we can get, you see where that is here because of that low target, as early an indication as we could get of maybe a distribution happening. And while the market's going crazy, and I still think it's going to happen, but while the market's going crazy, I would not want to be stuck in a place where I'm like thinking it's going to go up and then it doesn't go up. You know, I don't like that. So I'm not trying to like be vague or anything. I'm trying to be as clear as I can be. The reason that matters is because this marker that I found, this supply marker, it could be another indication that you're actually going up, which is good. So that's something you can use. Again, looking back at that creek here, and you can see it kind of cuts through the middle of these two marks, even hits the top on the 14th of September. All that's good. I don't necessarily think it's a true representation of a center mark here, which also has me kind of curious. And unlike GME, I don't think our center mark is horizontal maybe as much as it is, unfortunately, perhaps as much as it is downward, in which case we have to be really careful and cautious, because if it's that February 28th region, you can see right here where I'm pointing to on the mouse versus this peak, it looks like this GME one, but the GME one was so different because of the way that this set up sideways. Does that make sense? So this is the halfway marker on GME, but it's horizontal. But on AMC, if you use the halfway marker here and you use the angles that are presented with that June, July top that they gave us, that creates a very different picture. That's extremely low, like really low. Yeah, it kind of stinks. So if you're wondering, like, my personal opinion about it is that it's a kind of a crappy setup. So, like, I'm not a big fan of it. Yeah. This trend, the one that you see right here, the blue trend, it comes from here. I was basically using maybe like thinking in reverse of what would happen if this popped up and then consolidated low. It would be at like 480, because this has like this consolidation after the bottom. This would have some kind of consolidation before the top. I don't think that's really the way the market works, but it's possible. So it would look like in reverse, it would look like this goes up and then consolidates here and then goes up one more time. I guess it's possible it does something like that, sort of a double top. That would be rotationally symmetrical. It just so happens that this marker is also pretty darn good everywhere else. So this is a really clean setup. And it may be that that is indeed correct on some level. As you can tell, it's possible. But I'm not using it right now for anything else. So if you're wondering about those blue ones, they're not the same as the other parallels. They're different. Anyways, this makes me really nervous. I think the overall act of distribution here would probably be centered around this mark. You might even see some crazy stuff where it goes like to the top here. That's another thing that's kind of confusing, because if you look at this as a big picture motion, it doesn't even relate at all. Again, using like kind of the same theory, it almost doesn't relate at all to what we experience. If this is really the top, like we were saying on GME, if this is like a top, right, versus the bottom, and then you have some kind of a trend build out, GME suggests you go really high, like back to the previous top. But the way AMC's is right now, I think it's a pretty mixed bag. You know, it doesn't necessarily suggest, I mean, I don't know. To me, anyways, it doesn't really suggest great things. Well, I suppose, first of all, you'd have to sort of say this is going to drop so you could get it right. I guess that would be a huge move, regardless. I don't think people would care that much. I don't know. I have to measure that. What are you trying to get at, Booksy? What I'm trying to say is that GME would look like it goes back to 40 something, which is pretty high, you know, 40 to 50, maybe even higher if it follows through with the whole wave. It could go all the way back up to near the top, like 80. But the same implied move here on AMC is actually pretty low. It's a huge move percentage-wise. Huge move. But it'd be like hitting $2, for example. I'm not even really using this correctly. Should be measuring from here. I gotta do it right. Yeah, I'd be going from like $2. This is just the same, again, the same like move. I have no idea how fast it goes. This would be December 10th, so it's pretty darn close to the same. I don't know if I care that much if it goes to $9 December 10th. I'd be pretty happy. That's really high. But what's weird is that that's not a number I've used before. So I'm trying to say, like, this kind of throws a wrench, in my book, throws a wrench into some things. I've seen 9 used. I guess I have seen it before because we used it back when it was, we were talking about $8 to $9 here. There seemed to be a pivot there that they hadn't checked, but this is really low. This is not at all what I would have expected. I would have expected here or here. This is kind of in the middle. It's a weird number. So I think it's bizarre because GME would be making like potentially like a double top, maybe even higher, and AMC would not. AMC would be actually really low. I suppose it's possible. That's the first time I've done that measurement. I knew it was going to be low though. Specifically, I'm using the peak here, or at least the point at which I think the peak is at July, and then this little ledge right here in June. I might be a little bit off, because if I use, I don't know, I guess I could use the June top. I'm not sure. No, I'm using the July top here, not using the June top. Yeah, so this is right. It makes more sense because it looks like it actually matches quite neatly with what we saw back in February. Like resistance right here, build out resistance. But then this is really where things get bizarre because the natural place, if I were drawing like a middle, I would actually think that the middle is here. That makes more sense to me. I don't know if you guys can see it. This chart's super kind of hazy right now. This looks like the bottom where we took off. And then it definitely looks like it's hitting that directly over here. I think what's curious about it is that, and it looks a little bit more accurate when it comes to these middle marks. It feels right. However, again, going back to GME, if the middle is indeed like late February and not early February, changes things. There's this region from like, it's really just the whole month of February. I can't, maybe that's the problem, is I can't easily pinpoint it. Then really this is the middle right here. This lower ledge that was hit right there. I wonder if we find out with the spring. That looks pretty darn good too, this one. It doesn't have much of anything to do with the original bottom. It doesn't look like it. It looks like 250, 251, which is a number that's come up quite a bit. Doesn't even hit it though. Anyways, so I had not done this previously with the measure here. It's not even like a way to do it. This is literally on December 10th. It's backwards. I know it's not like an inversion. Gosh, that'd be completely backwards. I hate to say this, but it may actually make sense that this is the middle, because it definitely is one of the middles in terms of the iterations, but it might make sense because of the remember that number, those weird numbers that we found? That 279 was really bizarre. That 279, that they got the shares at 279. Thought that was really strange. And the 491, and it looks like it's gonna be kind of weird, but it kind of looks like that might just be like a shift down. Maybe that's we're seeing evidence of like the dilution. And there's 215. That's really close to that mark here. That's a little confusing. Well, my point in saying that was that we had a little math. We had a little bit of fun with the math when we were talking about the 279 and the 491 and what those numbers represented. And I started using the deviations. I started changing my mind about what that was. Not like necessarily just a shift. But that is dilution. I mean, right here. Then they announced that dilution. It's possible that... Ooh. Yeah, look. See the top and bottom here? Now I'm most curious. All right. So, because I think that could be right. So 556 to 246. But then if you take this and put it to 491, because remember we were looking at that and we looked at the two values. One was 491, the other was like 295. The low is 217, but look at where the middle is. So if you shift it down to 419, look at where that middle is now. It's right at 326. Which is really, really close. Really, really close to where that drop down happens. That's spooky. That would explain this being lower too. Actually explains a lot. Now that I'm thinking about it. Well, there we go. Got another bone to chase, I guess. It matters for one or two reasons, but one of the first reasons would be it kind of predicts where a low would be at 217, which is not really a number I would have used previously. We were using like 180 earlier. Two, it actually gives us some sense of timing. I mean, if you look at where that is, golly, it's like right on it. I had said 226 is almost a joke because of this number, but if we end up hitting this mark here at like 220 into earnings, this could be like the main hit we need. This is a little off the wall though, so just so you know, I'm not saying anything definitively, I'm just talking. That pisses people off, I guess, but whatever. That's really interesting. That's a whole nother thing though. So this is right on the this intersection is kind of usually an indication of a low, and it's right where it needs to be. Right around earnings, it goes down to like 217. But then the problem is, how far does it go? $489. We already know that. It's $491. Why did I say that? So then what if it goes lower? What if it does go to like 180? How much higher is that than the top? 596. That'd certainly give you enough motion here if you drop beneath by this much. There's a whole nother level to this that I do not want to get into, but it would be using this model right here locally. And we'll see. I don't really want to guess much more about where the bottom might be for AMC. I think it's a bit silly. It's kind of pointless. That to me feels a little pointless, but what I do care about is the motion response from that. So I do care about the measurement from that point forward. All right, guys, I'm gonna go. Sorry for being pissy earlier. Was not my intention, but I do think this is compelling. I know there's some truth to it, but I'm gonna have to work on it to. I think I need to work on it to hammer out some of the details. Is some of this stuff pretty straightforward, but I think that you have to kind of work with a grain of salt and understanding that the markets they're not always like perfect in the way you think they should be perfect with the math. A lot of times these setups are really clean, and I do think they are. But the implications here just depends on the liquidity, and I don't have the answer, for something like that just yet. So I have to look at the overall pattern here and see if by doing this, perhaps there's been a shift. And it's going to take some time. I'm going to have to work through it. So I don't think I have the answer just yet. I just don't. And it's going to be just me fumbling around on a chart for a bit. But I need to explore the idea if this shifted down, that numerically shifted down that much, that could change maybe the perception here. And then this idea of a cell test, I do think timing wise makes sense. We're at a place right now where, yeah, like technically, if you time it out, it is the same. I mean, but it depends entirely on where you think the top and bottom are, because if this, or excuse me, where you think the middle is. If this is the middle, then the timing is correct. This should be in like a cell test right now, just like this was. But if this one's the middle instead, and that's quite a bit later, it's like a month and a half later, or no, excuse me, like 3 weeks later, then it does add a lot more time here, therefore also adds distance down. It changes the dynamic of the chart quite a bit, to where this could be a reaction off of the middle that was the old middle, but they're establishing like a new liquidity middle. And that's not always going to be good news for us, because it could be that you guys are like establishing, they already did it. I know, but this would have been after the fact that they had done the shift, and then we still have to contend with the December 10th stuff. I know the timing of this top and bottom right here are the same, and everything points to this being a transition period right now, 28th through the 30th. That's the same time it took from this top, which is in December 5th, backwards to May 10th. And then this bottom, which is on April 4th, forwards to October 28th. So the concept of these being equal, that's already come and gone. Like it is, if it's the right middle. If it's not the right middle, which again, I don't know, there's not really an easy way to describe this, but if it's not the right middle, and this is the right middle, then you'd have to push this over. And I don't know how much you'd have to push it over, but you'd have to push it over. So if there's some kind of like an extension that happened, well, look at that. That's where it breaks out. That might explain why the bottom here was so weird and long. Ugh. Of course, it's December 9th and 10th. Yeah, it's December 9th. I did find it really curious right here that like there was a deliberate nothing that happened on AMC. Remember how we were just talking about it earlier? I said I was like 2 weeks off. Remember that? This is it right here. There's May 15th. And I was like, why didn't we run on May 15th again? Because it was like, we did start it, but then it took forever to get up there. But I was thinking that would be the peak. So like, but the reason for that was because the setup had the same, initially had the same timing. Even like when it was shrunk down, I thought it was really curious. But look, when you extend it from December to February 27th, 28th, it actually extends here to May 15th. And when you take that top measurement here and you go to May 15th, that's the same measurement from the top. That now extends to December. What does it mean? It means I'm maybe rolling stuff is what it means. Because I have December calls, but I'm not holding them. Honestly, it could take a lot longer than that. This right here, it implies a lot of things, but it would imply that, yeah, there's a lot that we could say about it. That's so bizarre to me now. I'm like sitting here like wondering. I mean, yeah, because I knew that was like, this was like a week and a half off. Something had changed. Hmm. It's not good. So this is confusing because everything here on this chart is built on the basis that this is going to go through this middle. But if it shifted down because of dilution, why stretch it out? Why not just shift everything down? It should all be shifted, right? Yeah, I don't know. I'm not sure. Again, I'm putzing around here. All right, I gotta go. I don't know what to think of this. I'll have to mess with this later. But this anchor point right here is really pivotal, so I'm gonna have to mess with it. I know this matters in the long run, but I can't quite put my finger on it. And I'm trying to determine what exactly this December 10th shift thing means. You guys are like, well, we already know what it means. I know. You know what it could be, and I don't want to, again, this is like more of the same kind of stuff, but it could be like a reversal motion where this does indeed follow through, but it only hits like 370. Maybe not even. Maybe it only hits like, it's already pushed off on that number though. It's like 330 and then drops. That would be awful. That'd be like my least favorite scenario. That's probably what's going to happen. Ugh. This would be miserable. So like it hits a low on earnings and we all think it's like a spring. Well, I don't think that's right. It says November 5th. It hits like a spring and then goes up to like 340. And then basically it reverses and drops really, really hard. Or even worse, it like sits here until the 10th. Yeah, this would be the worst. I don't like it. Hmm. It would be kind of consistent though. Yeah, it'd be consistent with like operator shenanigans because they've done this before. Um, right here, there was an iteration that shrank. It does have a cell test at the end, but it's not the strongest. Then it breaks out. It looks like it goes really high. Then they use that to set up a second ledge. So it looks like it's above the creek here. And it stayed above until the very last second. It does have distribution elements, but just sat there. It's not impossible. So you get like a similar kind of big push up. It'd go pretty high too, but it would stop underneath 327. Yeah, I can go as high as they wanted to go, I guess. But I don't think it'd necessarily go higher than like 4 or 370. I think 320 would be enough, but they could maybe push 358. And then kind of sell it back down into the 10th. And then on the 10th, they do a big rug pull, and it drops like a rock. I don't know what would happen after that. All right, I'll explore this some more. Get back to you guys when I feel like it matters. I think I'm just gonna start rolling stuff out for a while. I'm getting kind of irritated. I know that this by itself would be fine, but now I'm making myself nervous because I'm thinking about this shift down. I'm wondering. I'm wondering if it's not that simple. I already knew 360 was going to be a danger zone. Didn't this happen? This kind of happened too in 2020. It's just thought it already happened. We thought this motion here already happened with the 4. Well, it's going to be December. I mean, they said it have like a 6-month window or something, but yeah. It's kind of different from when I last looked at this because this has shown weakness, but it didn't follow through on that weakness. See this? This right here is weakness on the part of bears. It's right there. it looks like because there's a lower low here and it also broke through the trend and then they recaptured the trend and you guys are like, well, that's fine. And they're still going to go. But the thing is that that often indicates, again, a crack in the armor is important. So wherever this goes now, it's going for that strength test. The next time it drops through that ledge here, it should just go, right? But if the operator has shifted the chart down because they want to take it lower because of the December 10th thing and they're baking that in, one way to do that would be to drop it through here, which follows through on the weakness, but then basically generate like an inverted spring. So this right here, so this could be like a reaccumulation instead on the part of shorts. So there is an intention to take it back through here, this trend, like they showed there was an intention to do that, but it's no longer a bearish or a bullish intention. It would be a bearish intention potentially. So like right now, everything about this, if you flip it upside down, still looks really good because this to me is like a U shape. It looks like it's going back up to check, the top. All it has to do is push down then through 280s, roughly, and it's going to be off to the races for the bulls, at least for a moment. The problem is, again, normally I'd be looking at this and saying, well, this is the same thing, right? And it was, because this is another one that pushes down through, just like this one did. Kind of pushes through low. So you would be thinking, oh, it should go to at least 470. Again, all that's kind of true. I mean, kind of. It could be that that's the case. And normally, when we were looking back at this before, we had looked at this and said, what really should be going back and checking like this guy, like way over here. All of this is accurate. All of this leads to like logical conclusions that make sense from a bull side. However, if you had switched, let's say you just kind of swapped out, right? And you decided that you were going to change character here, which isn't that long ago, you could generate what looks like the same thing, very similar, play it the same way, but really be kind of swapping out your shares to some degree. You're still going to take it up. But you don't have to take it that far because if you average 370, that's the middle of the range. You don't have to take it that far. You only have to take it like 50-50 around 370. This is what's getting me bothered right now because now I'm wondering, like let's say it hits 250 and then it reverses, or let's say it hits like 246 and then it reverses. If in reality you only have to go around 370 and that's your average, if you've accumulated equal number of shares on top and bottom, your average is now 370. Anything above 370 would be a profit. If you don't have intention of taking it up the range, then really you could take it to the gap. You could just take it back to 491. You could take it to 440. Really logical, I guess what would be logical is to just take it back to the middle here, which again could be like 428, just slightly above, and anything above, and that's the middle there, that's freaky. Anything above, like anything above 370 is giving you money. So you just have to sell while, everybody thinks it's going to go to the moon. They could potentially exit everything that they've accumulated over the last couple of years. And that might explain why this took so long, because they're kind of shifting it over. I would really love for this to maintain its bullishness. I'm not sold that it's bearish. I'm just saying, like, if I'm an operator that was in the play thinking this is it, and then I see that there's not enough change and that they're going to dilute it, and we have to take this down to $1. If I've already accumulated here and I'm bringing it down now, I think that's pretty reasonable. Like the idea of like, hey, we now, because all you have to do is average down. You don't even need the same number of shares depending on when you buy. And then you can bring it back up to like above your average, which is probably like middle range here. Sell, 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 sell. It's not going to mark up. So you're just selling from 370 all the way up to 5, and it just goes as high as it goes here. All you then have to do is reverse it, stuck underneath 370, and then stuck again underneath 330, and it's ready to go down. Because you're already out of your position. You can keep the shorts that you got up here. That's kind of dangerous, but it does seem right. I'm not going to answer that question. TA is applicable. I'm not going to. You can't do technical analysis without manipulation. It wouldn't work. You need manipulation. TA is all based on what we see as patterns. There wouldn't be patterns if there wasn't manipulation. So it kind of answers its own question. Also, I'm not going to go into it again, but this has been predictable. It's just not usually the one that you want. And also, it's not always in the time that you want it. So there's danger. Yeah, this would be the crappiest scenario. There's a failure to get above the middle. So pretty much as soon as you get to this bottom right here, you'd put yourself in like a quote unquote danger zone state of being where you have to just really pay attention. Because if it starts reversing here and it fails to re-advance, it's done. I think then we'd have to look at this as a potential shift, downshift, going into December when they announce 500 million shares again. Even if it's 6 months away, you know, that changes things. I could see them doing that and sort of staging a move. I'd be really irritated, but that's why I think it makes sense. And I think the operator has enough ammunition to make it happen. So, all right, I gotta go. I hope you guys have a great day. We'll catch up with you later.